All right. Well, good afternoon, everyone, and welcome. My name is Oscar Joffrey, and welcome to, once again, one of our great KoreSummit Webinar series for 2021. It's amazing. I actually had to count how many webinars we've done this year, thanks to all of you. We are almost going to do almost 80 webinars we're targeted for. That's amazing. Thanks, everyone, for coming out. And we hope that the educational programs have been useful for you in your journey in raising capital, either using Regulation CF, Regulation A, or Regulation D. Our goal has always been the better everyone is educating how everything works, the better prepared you can be in your capital raise, rather than coming into a room that's full of darkness. We're putting a light on it so you know the A to Z. And today is just one of those other sectors that we feel needed special attention that is going to help us all get a better understanding of how it all works. And that's in real estate. Real estate today it's amazing. It's very powerful. Everyone's talking about it. Everyone wants to be involved with it, but it's a lot of different dynamics. And today I'm really excited about the people that we brought on board today to have a great discussion about real estate and how it's going to work and how you can participate as a company in utilizing these regulations. So, but as a reminder to everyone today as well, we have all our KoreSummit webinar series. They're available to you 24/7 on the YouTube channel at KoreConnects. You can also visit KoreSummit.io website. We have the entire library there, along with all the bios of all the speakers that are speaking. So you can contact them directly. Their LinkedIn link is there, including their email address. We do not want to create any friction for you to reach out to the people you want to speak to as quickly as possible to move forward. As well, I should remind you that we are also hosting a number of webinar series before 2021. That's right. We are going to finish the year doing some really interesting things. We are going to have webinar series that are going to talk about cannabis. That's right. Our next one is cannabis. Right after that, we're going to do digital securities, collectibles, and we're going to finish the year off with Dare to Dream. That's right. That's the title, Dare to Dream, because that's what this has been. This has been a journey for all of us for a number of years. And we just finished coming off celebrating Equity Crowdfunding Week with a great group, Startup Starter out in California. Fantastic week for everyone in the ecosystem and for everyone at large. The regulations are hitting major milestones. The triple-digit growth month over month. I mean, this is an amazing historical moment that's happening. And today, this is a sector that is really going to captivate everyone. And I'm really excited to bring someone, because, hey, I got to learn about real estate too, that is going to provide us that kind of needed overview of what real estate really is. And I know she taught me a few things just the other day and just having our early discussion. I am really pleased to introduce you all to Ms. Sarah Richardson, CEO and co-founder of True Realty. And Sarah,
Hi.
Welcome.
Thank you for having me. This is so exciting.
It is, isn't it? I've been thinking so much about what you started talking to me about, the different types of real estate, and it just got my mind tingling how an industry ended up coming up. Well, I'm not going to steal it away from you because I want everybody to hear from you, providing that insight before we dig into the preparation. So, as they say, Sarah, the floor is yours.
The floor is mine.
The floor is yours. Enjoy.
Well, yesterday we were speaking a lot about, how big of an industry real estate really is. I mean, it's a multi-trillion-dollar industry, and there's so many different facets to real estate. I focus primarily in residential real estate brokerage, right? But there's also, residential investing, and then there's fixing and flipping, and then there's residential Property management, and that's just the residential sector. You've got the commercial sector, which is even more vast with office and industrial, multifamily, land, everything that encompasses commercial from a property management and a REIT perspective. So there's property technology, which is now the fastest growing technology sector in the world. And a lot of prop tech is what you call it, is scaling, and a lot of different VC funds seem to be raising funds specifically geared around prop tech investments. I know that's something that we're looking at internally as well, is how can we scale our business nationally on a prop tech model so that we can reduce friction and we can improve such an old archaic model and an industry that's been around for a couple hundred years. And it's really still operating in a lot of ways as it was a couple hundred years ago. Did I lose you, Oscar?
No, you didn't lose me. I just, hey, listen.
Oh, okay.
The floor is yours. Obviously, the big discussion that I often run into is with real estate, with everyone, is that there is a bit of confusion. There's so much information out there. As you often see, there is people coming at it from the point of view, hey, this is a real estate project. And I don't, to be honest with you, I didn't even realize there were so many different facets to it until you and I started talking about it. So when it comes to, let's just talk about residential, because there seems to be a hot space there right now. And we'll run into you mentioned another one, prop tech. I'm really curious about that one. Yeah, so let's talk about that particular sector. Why is there so much buzz going on in there? Why is there such a big opportunity still when, I'm just curious from that perspective.
Well, because it's $1 trillion industry and they're big ticket items. I mean, residential real estate is a smaller ticket than even commercial real estate. And when you're dealing with an asset class that's so expensive, a lot of people want to get involved, including the governments. You'll see taxes in every municipality that's all geared around real estate. Everybody, including investors, including homeowners, know that it's the largest asset class in the world and one of the largest industries of the world. So everybody wants to be a part of it in some capacity, and we all need a place to live, right? Residential is probably the most innovative side of the real estate space. I was in commercial for about a decade. In commercial real estate, they always said that commercial follows rooftops. And what they mean by rooftops is residential rooftops. So residential real estate leads innovation. So all of the CRMs that we use for residential real estate, different lead programs, the list goes on and on with the different technologies that have been developed in the past decade to service brokers, to service real estate agents, to even go directly to the consumer. Everybody's heard of Zillow, right? Yeah. Everyone's heard of Zillow. Zillow is the largest prop tech company in the world. And so Zillow really paved the way for residential prop tech. Property technology is really what prop tech means. And so since Zillow, we've had the Redfins of the world. Realtor.com has been completely digitized. And there's all different kinds of new technologies popping up. And so many different venture capitalists that are raising funds specifically for prop tech ventures. It's a very, very siloed industry, real estate. And there's so much more improving that can be done to improve the consumer's experience, to improve the agent's experience, to improve the broker's experience with the agent and with the consumer. And we still have a ways to go in terms of prop tech. And I think that that's why there's so much money coming into this space right now, because there's things that I can think of, things that I know I need to improve a certain process that people much smarter than me are probably figuring out. And hopefully they find me someday so that I can utilize their services. I mean, right now as a company, we've got about 12 different technologies that we use from an operations perspective, as well as offering technologies for our agents to use. And this can be a little overwhelming for a realtor because real estate agents, the median age of a real estate agent is 55 years old. It's typically their third, and which is surprising, right? It's usually their third or their fourth career. And so with that comes a complication with technology, because we have slower adoption rates because the population of the professionals are a lot older, and it's a relationship-driven business. And there's nothing that we can do to change that. So the technology that, that came out in the early days was replacing that relationship. And I think that it's changed forms. Prop tech has changed its form now. So instead of replacing that relationship, it's enhancing that relationship. It's making the relationship stronger. And we like to call it a set it and forget it mindset, where the technology, the prop tech that's being developed, is helping brokerages and real estate agents automate a lot of their marketing and administrative support so they can enhance and be in front of clients more often, because we don't ever see that portion going away in our industry.
A part of me, I'm going, no way. So what I'm hearing from you right now.
What do you mean, no way about what?
Well, it seems to me that I kind of always thought, and I guess this is the assumption, and here hence the opportunity in real estate, where we're always saying that in real estate, just the asset itself, the asset classes is the opportunity. But even within the asset class, the way it's managed, the way it's distributed and all that whole industry, it's still undergoing massive improvements to make it even more efficient. So that's
it needs
interesting.
way more. It needs way more. I mean, if you think about it, you've got the broker or the agent, who I like to call the quarterback of the transaction. And that real estate agent is a lot of times referring the mortgage officer or the mortgage company, referring the title or the escrow or both, referring the attorney, referring the inspector, the home warranty, all of these other players that have to be a part of a 30-day escrow is ridiculous. And none of these people are talking. They're all just, all the information is flying directly at a real estate agent, and they're juggling that conversation. They're juggling those relationships. And that's a good thing, because they're hopefully working with that real estate agent frequently. However, there's so much more that can be developed in terms of keeping those, creating less of a silo and creating a better, more transparent conversation. I think that there's a lot happening with blockchain as well that can enhance security. Right now, the thing that scares me as a broker, and realtors don't care about this, what I'm about to say. It's something I care about because I take the liability of a realtor on. But $220 million were lost of the consumer's money last year in 2020 to wire fraud. And this is where a fraudster will pretend to be the escrow officer or the title company and send a link to our buyers or our sellers and say, hey, send your down payment here, your 20% down payment, send it here. And then they run with the money.
Wow.
In 2000, it's staggering. They're expecting that to go up another 50 to 60% in 2021. And so this is something that keeps me up at night, because if that happens to one of our consumers or somebody that we're representing, it's changing their life. Statistically, these people will never buy a home ever again. So that's something that technology can fix. By securitizing a transaction in a smart contract, we can protect everybody that's in that contract or in that encrypted blockchain environment, invite them into this environment so they can operate and send back links and communicate with one another, so they know what's coming, they know when it's coming, and they know where it was sent from. And there are certain things that are starting, and we're partnering with these companies to help protect our consumers, help protect their banking data, so we can be a more secure and trusted brand.
That's rather interesting, because obviously the capital markets, the private capital markets, why we're here today, it's the same thing. All of us have to work with so many different parties, broker dealers, escrow providers, payment rails, the investors. We need to give them the trust that the security they're buying, they're investing in a real estate project. How do we know it's a real piece of property, right? This is,
there's title fraud. That's exactly right. There's title fraud as well. I mean, there's people stealing
that's
title.
Right.
Yeah,
the actual title itself, which, if that all becomes, but it is great to hear that within the sector, as you're mentioning, within the sector itself, it is also going through its major upgrade, which is great. And and that was Nathaniel coming in. It's good to see him. But I'm even more excited about real estate now than I was. I mean, look, I saw the opportunities in real estate, both obviously in the from the real estate component, meaning the actual investing into the sector, whether it's commercial real estate or the the residential sector. But now within that sector, there's a whole, as you said, prop tech, the things that are going to make it manage it. So the people investing in these companies are operating in a way that their investment is secure. This is something really interesting that you opened my eyes to that I understand why we've been talking now.
Yes.
so I put all
I just want to be
together.
in business in a few years. I think that there's no insurance policy in the world that's going to cover me when one of my clients loses a couple $100,000 because a fraudster sent them a fake link. And so that's something that a lot of many of my competitors, this isn't even on their radar. They don't care. I don't even know if they even have an idea on how to align with a software or a prop tech company that can build a solution for them. Whereas I'm always looking for that next thing to protect, to make sure that we're in business and we don't get put out by, some kind of legality that will, due to a fraudster.
Agreed. And, that's the one of the things that I would say that I've noticed over the years is that we're finally thinking, all of us, as an ecosystem, and real estate isn't over there anymore. If people are going to invest on it, they're going to be part of this ecosystem. And I like the way you're thinking about the fact that if we can securitize that property with the proper records and it's authenticated and and that authentication carries through to the buyer, which then somebody wants to raise capital for it, we streamline it to get people to not be afraid of making that investment into these companies because something doesn't jive up. The actual chain itself is the greatest authenticator because it's immutable and it's been authenticated all the way through. So
absolutely,
I'm excited about that. And I just never, like always, the more you discuss things with people, the more opportunities arise. And listen, you and I are going to have more discussions on this. I thank you again for coming in this afternoon, giving us a bit of an overview of real estate. Obviously, we're going to dive in with our other participants this afternoon that are going to bring a great insight into what Sarah started with, is that here is a sector that's all great, and here's the people that need to dissect it. And I'm going to leave it to them. This is called the preparations, and I'm really excited. I do want to apologize to everyone. He feels horrible this afternoon that he just couldn't make it, but Marty Tate, our colleague, who you've seen on many occasions, unfortunately was pulled away with another required meeting that needed his attention. So today, but you get three great individuals that I think you're going to have a fun discussion. So I'm going to leave it to Douglas. Have a great discussion on the preparations.
All right. Thank you, Oscar. Well, my name is Doug Ruark. I'm president of Regulation D Resources. And this segment is going to be on the aspects of preparing a Regulation A plus securities offering for a transaction or an issuer that would be in the real estate industry. And we really have a great panel here today. There's a lot of experience on this panel. I'm excited about it. If you're a real estate operator, if you're a syndicator, if you're looking to do a Reg A plus and raise some money for real estate, you're definitely going to want to stick around for this next hour. There's going to really be some great insight on what it's going to take to prepare a Reg A plus, the information you're going to need. What does the process look like? We've got Nathaniel Dodson with Dodson Robinette, also known as the crowdfunding lawyers, bringing a ton of experience into the equation here. We got Joel Steinmetz with Rialto Markets, He's going to be telling us how integral it is to have a broker dealer on board, and obviously the interplay between a broker dealer and the transfer agent and escrow. So we got a really great hour that's setting up here. And why don't we go ahead and start with some introductions? Nathaniel, please, sir, tell us a bit about yourself, your firm. You guys are a leading firm in preparing these securities offerings. So give us some color on you and your firm, and then we'll move on to Joel, and he can tell us about himself and Rialto Markets.
Sounds good. And thank you so much for the introduction. So I am the owner of or main partner, managing partner of Crowdfunding Lawyers. We do primarily just focus on kind of what can be marketed online and really maximize our clients' opportunities to really have the greatest reach possible, focusing a lot on Regulation A offerings, Reg D, Reg CF. And I truly appreciate having a broker dealer on the panel and involved, because it is so unbelievably important to have them as a component of the overall process. It kind of keeps everybody safe and in line. They handle a lot of the heavy lifting, but in terms of kind of what we do in our experience, very much so take a team-based approach. We've represented thousands of offerings over the years and have helped coach, advise, and kind of set up the platforms for our clients to raise billions of dollars as well over the years.
I guess I'll go now.
Joel.
Hi, my name is Joel Steinmetz. I'm the COO and co-founder of Rialto Markets. Rialto is the broker-dealer, as is mentioned, and we have, in essence, two lines of business. One is acting as a broker-dealer, a FINRA-registered broker-dealer, and that's how we help people raise capital and work with players like Doug and Nathaniel, and figuring out from a legal perspective and from a consultancy perspective and from the broker-dealer perspective how we can integrate all of the component parts to assure that you've raised your capital in the most efficient way possible. Additionally, we have a second business, which is secondary markets. We are an SEC-recognized alternative trading system. It's known as an ATS, which allows for secondary trading in those securities. For right now, let's start with the broker-dealer side of it. What we really will offer is working with everyone here from a technological perspective in assuring that the rules that you have and you must abide by when raising capital are complied with, are automated so that we can technologically stay on top of it, are overseen, and are efficient in their distribution. So you need things like anti-money laundering and know your customer sign-offs. You need things like oversight of external communications in any capacity. You need to make sure that escrow agents and the escrow accounts are integrated with the transfer agent and integrated with the payment rails and integrated with the banks, the customers' banks. Having all of that integration to assure that the money goes from where it's supposed to go to where it's supposed to land, and that the shares go from where they started to where they're supposed to land in an efficient way. As the broker-dealer, that's what we do, working with the various parties to assure that technologically that is as smooth an experience as possible.
Fantastic. And just as an introduction for myself and my firm, again, I'm Doug Ruark, president of Regulation D Resources. We are a 22-year-old firm that specializes in the preparation of securities offerings, Reg CF, Reg D, Reg A+. And we also have a technology component to the business where we develop investor web portals that then synchronize on the back end with the fantastic technology that companies like CoreConnex have. And so that's my background and the firm that I run, and we're located in Golden, Colorado. What I want to start off with is, first of all, I want to start off with just myself talking about, why I think I'm such a big fan of Reg A Plus for real estate. And, especially with the streamlining they've done, the plus designation. So number one, when you look at going to syndicate capital, usually when you're looking to do a real estate type fund, you're usually looking to raise capital in amounts that are going to be large enough where putting in place the A plus, having the extra time, effort, and money to put that in place is really going to pay off big time when you go to market. And obviously the big advantages of Tier 2 Reg A Plus, 75 million in a 12-month period. You get to generally solicit the public. You get to sell to everyone, which is obviously one of the big advantages is you're not limited to just accredited investors. But the other thing that I think is important is it is a sophisticated offering. It's really next level from something like a Reg D offering. And obviously there's lots of Reg D offerings that get prepared for real estate. But at the end of the day, Reg A Plus really provides some significant benefits over a more simplistic type Reg D. I think the other thing that I find interesting about A Plus and its application to real estate is the fact that when you're looking at the typical real estate offering, it's usually going to be a new special purpose entity. So if it's a real estate fund, for example, it's going to be a new LLC, or maybe they're using an LPGP structure, but it's going to be a new entity. And the benefit of that is that the Tier 2 financial audit is going to be a very simplistic audit. There's no historical financials to audit. So most of the time, you're looking at just an audited opening balance sheet. So then, the benefit there is that the issuer has less costs on the preparation side than, say, a software company that's been operating for 10 years and has 4 different subsidiaries, and then they might face a $20,000 financial audit. I think the other thing that I find attractive about applying Reg A Plus for real estate is the fact that real estate is an asset class that everybody can get their hands around. It's not like biotechnology where you might have a business that's very complex and sophisticated and people may not really be able to get their hands around the investment opportunity or the investment risks. Real estate's different. People understand real estate. The average investor can really get their arms around it. And again, that's where then the ability to sell to everyone makes such a big difference. As far as our discussions, I'm gonna be chatting with Nathaniel here in a second about entity structures and transaction types. I know he's going to have a lot of really good info for people as far as, hey, how do I set one of these up? I'm interested in getting into syndicating capital and purchasing real estate and maybe running a portfolio. Well, what does that look like in terms of the entity structure and the org charts and the interplay between these entities? One of the things I did want to say is that, from my experience, Reg A Plus works great for like blind pool real estate funds where you don't have a contractual obligation and timeframe issues, because Reg A Plus, being a more sophisticated offering and being an offering that has to get qualified through the SEC, it does take a little bit longer to prepare. So you can certainly use one to, for example, raise equity for a more significant single asset acquisition. But you would also need to then have a seller that's willing to sit still for probably a little bit longer than the normal due diligence period, because you are going to have a little bit longer of a lead time to prepare it.
You know what? Could I cut you off real quick? Because we've kind of solved that problem.
Sure.
And it is relatively unique to the industry of kind of how we approached it. We've just gotten through the qualification process with one of our clients, Grant Cardone. He's doing exactly this. And so kind of the way that we've solved hey, you have a starting out client. He's looking at, what am I going to do with $70 million? I'm used to raising $5-10 million for the single property. Also, there's always kind of that headache and issues about trying to raise $70 million again with a blind pool. Everybody wants to be the last dollar in the fund, which is a big part of the reason why, and you know this as well, syndicating a particular property oftentimes is way easier to capitalize than that blind pool. And now you're talking about a Reg A with a $70 million blind pool. Sometimes it's not, it's not easy. But so we've come up with a really good solution here and got it through with the SEC, qualified, no comments back, really got it done in really a couple of months, which is pretty unheard of. But hey, we're there. So what we're doing is setting them up as series LLCs, and as REITs. And with the Reg A fund, we are able to kind of, once the fund is set up, and we generally have kind of that first class and first asset figured out, and you're absolutely correct that you want to have some additional time frame there. But so there's some ways and structures to get around that delay. But setting it up as a series, and then you have the issue of taxes and partnerships, and you've got a massive fund and all these series, and that can be a complete pain as well. There's a solution there. Also, we're doing them as REITs. So kind of throwing it out there as what our big focus has been is the Reg A series REIT. The REIT really simplifies the taxes. There's not the K1s going all over the place. You're just sending out the 1099s to the investors. And all of a sudden it goes from, hey, we're just trying to raise blind pool $70 million to we can keep creating separate series for individual properties. We've already gone through the qualification process so we can make it happen faster. And so it's kind of like, hey, we're setting up your business for success, not just for this one project, but for your future as well. Yeah. So we've kind of taken a different spin to it. We've made it through successfully, as I just noted, with a recent client, and we have quite a few more that are lining up. And it's just like that alternative to the individual Reg D syndications that are just over and over and over and over. So we've got a solution there. Also, I'm sure everybody's kind of aware of the Congress has been talking about changing some of these self-directed IRA rules with a major deviation of not allowing for self-directed investments into the private placements, into the private offerings. Really, and I understand this, they don't want the private real estate deals to be so exclusive that you've got to be an accredited investor to even participate in your IRA. I see it as the Congress is trying to open up the opportunities to the masses, which also gives anybody that's listening and interested in Reg A offerings as well. Here's the way that you can offer your investments to the masses. And so if that Congress changes to the self-directed IRAs, which we all know can be a huge portion of a lot of people's business, all of a sudden you're set up to not care if those self-directed IRA changes come into place either.
Good point. Yeah. One of the things we've done too is and one of the things I'll tell operators is if you do have a single asset acquisition, go ahead and get a firm that's going to be doing your prep work, get them started early. You can actually pre-build a lot of these filings just based on asset class, market, management team, special purpose entities in place. And you can then kind of fill in then the specific asset once it's under contract. A lot of times you have real estate operators, they've got 3 or 4 assets they're evaluating, but they know the market. It's, hey, we're looking at 50 to 70 unit multifamily properties in Austin, Texas. We've got 4 we're evaluating. We know we're going to be doing an offering to syndicate the capital to purchase one. We'll go ahead and get started on the prep work. There's a lot that can be done on these filings to get a head start on that, and that obviously can also cut down the timing. So Nathaniel, I wanted to ask, kind of talk about, obviously a lot of the people listening to this right now, we're going to have obviously some people that are sophisticated in these processes. They've probably done offerings before. And we're also going to have some people that have never been through this before and maybe have never even set up any kind of syndication. So let's get your feedback, if we can, Nathaniel, on things like entity structure. If let's say I wanted to put together a small real estate fund, I want to raise maybe 20 million in capital. I want to go buy some assets. tell us about what would the typical structures look like? Like, what would the org chart look like? What type of entity would I use? Because I think that'll kind of help prime the pump for the balance of this conversation, which is, okay, the entities are in place. Now, what do I need to get Nathaniel to get us through this process? What kind of information is he going to need? What's the granularity he's going to need? So let's start with that. Give us a little bit of color on, what do the typical entity structures look like for these real estate deals, and what's the interplay between those entities?
Sounds good. And please call me Nate. Nathaniel is only when I'm in trouble with the wife. So
no worries.
Yeah, I'm not in trouble yet. So thank you. But I do, for anybody that's listening, if you're thinking about a Regulation A offering, and there's a lot of great reasons why to, you better know already how the entities are come together and the org charts. And if you don't do a Reg A. There's other great strategies and options under the Regulation CF and as well as Regulation D, but that is kind of your, training wheels, learning to get through the process, learning how these structures work. But it is truly as simple as, at least when we're working with somebody that is to the level and expecting to do a Regulation A offering, we're generally kind of using LLCs, limited liability companies, throughout the board. And there are certain states that are more favorable to organize than in other states. But it's always kind of, it's unique to who the client is and what they're expecting. But we always have kind of a management entity that's sitting on top of the fund. That is the manager. And with the limited liability company, the manager is like the president of the corporation. It's the top dog. And so we generally will have a management entity. Why? They're kind of like a GP in the old-fashioned LP, GP sense of the words, that there's liabilities that are there that don't really affect or apply to the individual limited liability investors, the LPs or the passive members. So generally we have that. Then we'll use a LLC most often. We'll use other types of entities when it makes sense, but for the fund itself, using an LLC. And then with that, all of the investors are coming into the LLC, whether it's by class or as a generalized blind pool fund or individual syndication. They're coming into the fund itself. They may have one or multiple classes of interest, kind of just based on how it is overall set up. And then the fund, if it's doing multiple properties and multiple transactions, it generally has a wholly owned subsidiary underneath the fund itself for every property. And the reason why you would want to do that, it's been called an SPE, single purpose entity or special purpose entity, where it is wholly owned, and then it becomes the borrower of whatever the real estate that is getting acquired. And two reasons why we're generally using these SPEs. It's asset protection to begin with, and asset protection for the fund level. Kind of the way that I've always seen it is, if you had a fund and all the real estate is owned directly by the fund, then all of a sudden you've got a problem at one of those properties and all of the properties become at risk. Using these separate SPEs, these separate wholly owned subsidiary entities, it can protect one property from the next. So if there are problems at one of the assets, it doesn't cause that contagion of affecting all of the assets. And frankly, a lot of the borrowers require that as well. And in addition, really focused on the securities. I do have another law firm that we do kind of the beginning to end on the transactions as well, from the finance, the contracting. We do a lot of on that side also, and can tell you, most lenders don't really want to loan to a fund either, because it really puts them at risk also. So more than anything, it's also a lender demand.
All right. So Nate, I've done a couple small syndications, got a couple funds running. I come to you and let's kind of, I want to give the viewers here kind of a 40,000 foot view of the RegA process, which is, ultimately there's going to be entities formed. There's going to be a Form 1A drafted. There's going to be the exhibits put in place. That file's going to get, obviously converted. You get the opinion letter in, you get that sent to the SEC. They're going to do their review. There'll probably be maybe some comments back and forth. There'll be qualification. Ultimately, along the way, there's going to be, decisions made as far as, getting Rialto Markets on board, for example, getting the transfer agents. Let's talk about, I'm coming to you, Nate. I want to do a real estate fund. Tell everyone, as far as your ideal client, what kind of information are you going to be looking from me for? What kind of information do I need to provide you to make your job easy, as easy as it can be? Obviously, these are sophisticated filings, but to get this put in place, like it's for me coming to you as an ideal client, what information do I need to show up at your doorstep with so that you can do your job properly?
Honestly, an idea and a dream. So, and I say that with the most sincerity, because people aren't organized. They don't have all the information. So we've kind of just set up our process where we don't expect anybody to come to the table with any predefined, this is exactly what we're going to do, and there's no deviation. We really, no matter where they're at or where they're in their business, starting point, new, have done this 1,000 times, we always have people start with going through kind of our comprehensive questionnaires. Not because, hey, this is the final information and this is definitely what we're going to do, but more so, get your ideas and get your thoughts down on paper. And our first step is always to review that. And there's always additional information requests. We have a due diligence checklist that is so unbelievably comprehensive that nobody ever has all of the information. And we work around what we can when we can. There's, of course, as you know, lots of things that there's no working around. And, broker dealers, they look under the skirt as much as anybody. So it is kind of coaching and setting up the client for their success to know what's going to be asked of them. But we're there to kind of our first part of the process is going over what's your thoughts and dreams. Based on that, here's the due diligence that we need. Here's the documentation and information that we need. Let's talk about who are your team. What transfer agent do you plan to use? The accountants, the broker dealers, and everybody. And most of the time, people haven't figured all that out either. And so then it's up to us to say, hey, here are the right guys to work with. Go talk to them. And so it's all kind of part of that front end process of the information gathering before we ever start working on a single document or form a single entity.
Perfect. Joel, let's talk about, when as the client starts getting to the point where the Form 1A is getting drafted, it's starting to kind of reach a point where it's maybe 70% complete. Time to start getting some, the other vendors involved. Look, we're huge fans of KoreConnects. The technology that they've developed is fantastic. If you're going to launch one of these offerings, one of the things that you want is you want to manage this with high technology. You want the best in class technology. And I think part of it comes down to, number one, the ability to get a lot of exposure for these offerings very quickly. I mean, you got social media, you have LinkedIn. I mean, there's things that can be done to get a significant amount of exposure for one of these offerings. And then you're going to want to use technology to manage that. You want to use technology to engage the investor prospects, take and track them through all the processes. And so that's one of the reasons why we're, huge fans of KoreConnects, is that they've really done a great job of developing that technology and being able to get investors through the investment subscription process properly. Let's talk about, Joel, with an administrative broker dealer on board with Rialto, class leading broker dealer here in the industry, why tell us why it's important, first of all, to have an administrative broker dealer on board, not only from the compliance standpoint. There's obviously also some problem states where you've got additional filings made. So if you can give the viewers here a little bit of color on that, why it's important to have a broker dealer on board. And then if you can also chat about the interaction between transfer agent, broker dealer, and also escrow, because usually on these real estate funds or even single asset acquisition type deals, there's going to be a minimum offering amount. There's a minimum amount of capital needed to be syndicated for that offering to be viable. So Joel, if you could give us some color on that, that'll probably obviously really help the people viewing this this segment understand the interplay. First of all, the importance of an administrative broker dealer, but also the interplay between the transfer agent, the broker dealer, and the escrow, because that I think is an important dynamic on this process as well.
Yeah, absolutely. So we really approach this in maybe from a different angle than has been approached by, that is normally approached by you and Nate, in that we look at it and say the key component from a broker dealer's perspective is how do we make sure you get your money? So it's not just setting up the entity, but once all of that is set up, which is not what we do, once all of that is set up, we then have to figure out, well, what's going to get you the money? And there are going to be a whole bunch of different things that you have to do, both from a legal and regulatory perspective, as well as a sales perspective, to make sure that you can attract the most amount of potential funds that you can, cast the widest net. So let's just start right from the beginning. There are a whole bunch of ways that this is going to be set up, but ultimately, there's got to be some AML and KYC type of vetting that goes into play. And that's not only for the issuer, for the company looking to raise the capital, but every investor that comes in is going to have to be vetted to make sure that they comply and they're not one of the people that you can't have on your cap table. Doing that manually in a retail type environment like Reg A, when you're getting potentially thousands of investors coming in and a multiple of that seeking to come in or requesting it, doing that manually is virtually impossible. You need to create the technology that, as Doug said, connects with the transfer agent, connects with the escrow agent, connects to payment rails, whether that's payments through wires or ACHs or credit cards or what have you, and the banks of the ultimate investors, making sure all of that is unified into a singular technology that connects all those pieces of the puzzle. So we look at it and say, how are you going to be able to raise your money? You're going to have to go through those stages. We work with attorneys like Nate and others who will, and with the consultants and attorneys like Doug and others, in order to make sure that all the filings have been done correctly, the company has been set up properly. Nate, by the way, thrilled with the idea of doing that as a REIT. And one of the main reasons is because we have to create an environment that is going to make these types of investors feel comfortable with their investment. In real estate, as was stated earlier, it's people can get their hands around it. People understand what it means to own something in real estate. But then when you get to the nitty-gritty, a lot of investors are lost because there are so many things. Debt in any kind of borrowing and loans in real estate is different than borrowing in any other industry. So because of that, having the understanding is kind of difficult. And that complexity can be reduced, if not eliminated, but certainly mitigated with the right structure of the deal. So getting into something like a REIT makes it a lot easier for a regular investor once invest $2,000 to say, I know what I'm getting into. It's a lot different than before. We want to be able to create that environment so that you can go out, spread the widest net, get the most interest from a retail type of environment, which, like I said, is going to require significant technology to integrate. We work also, we're very big fans of KoreConnex. They have a great technology that allows not only for the smoothness of the experience, but the scale of the experience so that you can get multiple players coming in. Now, just to touch on Doug's last point, now the money comes in. What we do when you come into the system is you click the button on your website, the issuer's website. You click the button there, the investor clicks the button that says invest now, and then they fill out whatever subscription. At the end of that subscription, they get one of two messages. Either you were rejected, because maybe you're a terrorist, or you were accepted and you're now the proud owner of X amount of shares of such and such. Now, that X amount of shares doesn't mean you have it, doesn't mean it's there. It just means your process has been completed. The money then goes into the escrow account and waits there. The issuer determines when they're going to take their money out, what's the minimum that they've put down before they can take the money, when they'll do it, let's say once a month. And once that happens, we are going to allow that transfer of the money in the escrow account to go to the issuer's account. At the same time, we'll be talking to the transfer agent to let them know, here are new members of the cap table. Here's when they're going to be put onto the cap table. Here's the amount of shares that they have, et cetera. All of that happens behind the scenes. The investor just hit the invest now button and filled out the form, and then it's done. That kind of smooth experience at scale will allow you to start getting potentially thousands of investors. Now, the advantage of getting thousands of investors not only allows you to democratize your offering and reach an investor base you never could before, it also allows you to start building brand. And when you build brand name, your next project, the next 10 million, the next 70 million that you're looking to raise now has a customer base you can go to start with that's not cold, but warm to be able to begin those investments.
Yeah, and actually, it's interesting. I mean, Nate had mentioned Grant Cardone. So, I mean, look at the strategy that Grant's used. And obviously, the guy's a bit of an anomaly. I mean, he's a dynamo as far as his social media stuff goes. He's got massive followings. But what I always tell people is that you can replicate what he's done on a smaller scale and be very successful. And I think one of the benefits of a vehicle like a Reg A Plus is allowing you to get out, get exposure to the entire market as far as investors go. And then you build those relationships. If they're in a deal with you and they're getting the returns they expected and they've enjoyed the relationship and you launch deal number 2, they're probably going to invest. But not only that, they're also probably going to be bringing their golfing buddies and, friends and family and cousins with them. I mean, I've seen that dynamic myself where I do private investing. I get someone that calls me and says, hey, I put money in with this guy. He's a real estate developer. He's got a new project. And, you really ought to take a look at investing. So what Nate had said with Grant, I mean, obviously Grant's doing fantastic, but when you look at what he's done, I mean, he really has been able to leverage that social media base, and he has a built-in investor base now. I mean, that's just really what it is. When he launches an offering, it's pretty much pre-syndicated in a way because he has such a massive following of people. So
if I can jump in there for just a second, and that's a really important point. When you're looking to raise capital, you have to have that base. Either you have people that know who you are and are warm, institutional players, what have you. Maybe it's retail players that know your company. If not, you need to be able to go and find marketing. You need to be able to find, I know there's a session on this a little bit later, in order to grab that universe in. But what's very important is to work, and this is why we think the solution that is offered within this group that allows you to keep everything within your website, within your area, allows you to keep all that data. So that means as you build on this, you need the marketing potentially a little bit less because now you have 5,000 people to go to. And after your next offering, maybe you have 8,000 people to go to. And you can keep building that world up that allows you to say, before I even go to the external world that I've never touched, to the cold calls, I have thousands of potential warm calls who have experienced what I've delivered and are usually very happy to invest again.
Yeah,
and if I could, before we move on,
Nate.
I know we're trying to move on, so I apologize. I'd love to throw in my own 2 cents. And Joel, 1000% correct. Doug, absolutely. But something to really think about is, and here's kind of the, hey, get started now to the anybody that's listening. It's not just simply about pitching your deal, pitching your fund, talking only about the investment. What the secret of the social media influencers is they have these massive audiences. And frankly, the audiences aren't just showing up because, hey, guess what I'm pitching now? They're showing up because the client, the people are engaging. They're providing information, education, or entertainment in areas that are getting people's attention. So that doesn't require you to, I'm going to start this RegA, I'm going to start this fund right now, and I'm going to get out there and start pitching it. It's all about pitching something that really gets people interested, coming back and engaged as a general audience. And then when you're ready for the Regulation A offering, it makes it a lot easier to already have the masses, already have the audience to put it out to. And at the same time, if you are out there and providing the information, kind of testing the waters, as they say, which anything that you put out there to test the waters, basically advertising before you can actually accept any money, still gets filed with the SEC. So at the end of the day, kind of a best option is not to wait, but to start today, not worrying about what's this RegA going to do, but what do I need to do and what's interesting about me to create an audience. So when I hit that point of having the qualification or ready to start sending out the test of the waters, you've already got the audience to talk to.
Good point, Nate. Yeah. Yeah. I mean, one of the other things too, and it's funny because I bet Nate's probably run into this, is, you'll get old school kind of real estate guys where, the last time they did an offering was 2003. They did a 506B offering. They had a minimum subscription amount of $200,000 because they don't want to deal with a lot of investors. And what I think is interesting is when they come in and do a modern securities offering that, first of all, allows you to generally solicit the public, which is a complete revelation to a lot of these guys. But the second thing is the technology that's available now to not only process people through the subscription process efficiently, track them all the way through, but to then manage them as an investor and manage your cap table. And you're using this, this fantastic new technology. I say new, it's been around, but I mean, it's being refined every year. It's a whole different ballgame. And it is interesting, some of the discussions with some of the older school, like real estate guys, where you tell them, hey, look, the average RegA investment's like $2,500. And they look at you, kind of odd, like, well, I don't want to manage that many investors, but it's like, look, the game has changed and the technology has made it a lot easier, obviously, to do that. Nate, I want to drive back to some of the little more kind of granular details on RegA Plus and kind of tap your experience. So I've put my RegA Plus in place. I'm out raising money, or I have raised money. Let's chat about especially for people maybe coming out of a Reg D that are more used to just a notice filing. Tell us about the filing differences. I've got my RegA in place. What are the filings now on an annual basis that are going to go in? What do they constitute? And then also let's talk about my requirements on the financial side as far as audits.
You do have to go through your annual audits. And there are filings that take place with the SEC. And, we don't take a different approach if somebody's doing a Reg D fund or a Reg A fund, other than kind of the changes in the audits, but really providing the filings with the SEC with what's happened with the fund. Has there been any changes? Are any amendments required? The 10Ks, 10Qs, and getting all the information to the SEC, getting the annual audited financials. It is, not the quarterly filings that have to take place, but you do have to do it annually to keep the whole process moving forward.
Let's talk liquidity. I've got my fund in place. I've bought some assets. and this is where I want to bring Joel back in, because that ATS system that Rialto's got is really interesting. Nate, let's start with you. Well, as far as liquidity options go, what are the liquidity options? There's let's just call it a multi-asset real estate fund. I'm invested in the fund. What tends to be the exits that a lot of these real estate operators tend to have? I mean, obviously one would be just, liquidating the portfolio, but let's talk about how do you set up the gating around the fact that you're going to hold the portfolio and there may be either redemptions happening, and then we can also then drive over to Joel and talk about the fact that obviously with Reg A plus securities, they are, they're freely trading out of the gate, and then, being able to maybe put something, put these securities up on an ATS. Let's start with you, Nate. Can you describe what are some of the typical liquidity options someone might have in one of these funds?
Sure. Well, selling it onto the market through the ATS, I think it's great to have that. You do have to have both the buyer and the seller. So there's kind of that ongoing interplay of you can leverage and put your offer onto the interest onto the ATS, but you also have to have the other side. You have to have the buyers. So we are still experiencing that having the redemption policies and strategies are more what people are leaning on. And as long as it is a multi-asset fund, there is generally refinances happening, sales happening, and because there are annual audits, you do have kind of an updated valuation of the interest of the fund itself. So kind of what we coach people on is, hey, there's going to be a financial audit. There's going to be a valuation of each of the assets. Open up a window during the year where people can exit or elect to have a redemption of a small amount on an ongoing basis, so you don't have a run on the bank. Mm-hmm. But then you're opening up the opportunities to, okay, now I've got to figure out where I'm going to find $5 million. Hopefully you're not liquidating assets, but maybe it takes selling one of the assets or potentially refinancing one of the assets to create sufficient liquidity to take out the investors that want to redeem some portion. And even if that's taking place, they're removing their interest from the fund anyway. So it's kind of that difference between if you own 1% of a $10 million fund or 10% of a $1 million fund, it's all about the same.
Joel, that ATS system Rialto has pretty fantastic. And the reason why I'm touching upon this, we're obviously this segment is on, the preparation aspects, but in a way, this is something that people should be thinking about, which is if they're going to run a fund or they've got an asset acquisition that they're going to maybe hold long-term, they do need to think about that, which is, at what point do you want to have some options for people to gain liquidity from their interests in the entity? Joel, can you tell us about Rialto's ATS? Because obviously that is an option.
Yeah, absolutely. Actually, just to start on that, when you talk about liquidity, you need something from liquidity even from the earliest stages, which is how are you getting the money in the primary market just to get those investors? And one of the things that has to be considered is just keep in mind is you have to get to all 50 states, right? The wider the net you have to be able to raise money and raise capital in all those 50 states is going to help you. And the 8 problem states that are referred to are not the small ones. They're usually some of the bigger ones that you really need to make sure you can get that primary liquidity from. And so make sure when you're dealing with a broker dealer, Rialto happens to be registered in all 50 states, but make sure the broker dealer you're dealing with is registered in all 50 states so they can help you. When you get into the secondary market, there are a couple of things to realize. Generally, and it's not the real estate market specifically, but generally companies about 10 years ago stayed private for about on an average of a little more than 4 years. Now, companies stay private for approximately 13 years. So when you have investors that come in the earliest stages and they are saying to themselves, when am I getting my money? And it's going to be 8, 10, 12 years from now. That's hard for them to swallow when they're getting involved in the market. So giving them an option to get out earlier, sometimes it's a redemption, but sometimes it's also to find other liquidity within the marketplace. That helps both the investor feel comfortable that there might be another place to be able to sell that security, not go through a redemption process, but simply put in an order that says, I want to sell X. To Nate's point, you need a buyer, but it does give you the opportunity on an ATS, for example, an alternative trading system, to place your order and advertise that to tens, if not hundreds of thousands of people that might have an interest in getting involved in that security. That means you don't have to just go back to the company. You can actually just see if you can find another buyer. That's what an ATS does, that provides that liquidity for you. That will enable you as the issuer to give comfort even in the primary raise, that someone can get out of that. And second, when you're, instead of dealing with all of the redemptions and what the process of that, it might enable you to eliminate that administrative experience and deal with and sort of hand it off or outsource it to an ATS that does it for you. So instead of going through the whole redemption process, someone can, in essence, redeem their ownership by just selling it to someone else. Getting back to our point from earlier, it also builds brand recognition. You're now advertised on an ATS. Thousands of people who never heard of you before and aren't invested in your company now know who you are. Perhaps they get interested and you've now expanded your reach to people who you never even knew before. All of that is enabled through a secondary market. That's what our ATS and an ATS will deliver.
Nate, related party transactions. We see a ton of them with real estate stuff. Hey, we're running a fund. The manager or sponsor also owns the property management company, or we happen to own the construction company that's doing rehab on the assets. Let's chat about that for a second. How important are those disclosures? What do real estate operators need to understand as it relates to the fact that so many of these deals have related party transactions happening? What's the importance of that as far as our disclosures in these in the Form 1A, any kind of management agreements that need to be disclosed? Can you give us some color on that?
Absolutely. And when it comes to, we call it conflicts of interest, and that has such a negative connotation, a conflict, but really it is that related party transaction. And with any offering, especially the Form 1A, the Regulation A offerings, full disclosure is important. And if there are any related material, related party, third party companies that there's an affiliated ownership, it should always be disclosed. Those documents are available for anybody to review. They get filed with the SEC. So it is a transparency, and it's not only to protect the investors, it's to protect the sponsors and the operators as well. Because all you need is one guy yelling and screaming, you didn't disclose that these massive fees were going to go over to your other company. Mm-hmm. Right there, that's a lawsuit waiting to happen. So conflict of interest is not bad as long as you're disclosing it. And of course, those agreements always have to be fair and reasonable and equitable across the board.
So gentlemen, we got about 7 minutes left. I want to go to Joel real quick. Joel, words of wisdom for someone contemplating doing a Reg A plus, anything that you think our listeners and viewers here should know. I'm getting ready to do a Reg A plus. What are some things I ought to know? Words of wisdom from someone in the industry that might help me through this process.
Number one, make sure you have good lawyers who really understand. A good lawyer is not just a good lawyer. A good lawyer is a good lawyer who knows Reg A. It's very important to know Reg A. Make sure you have someone who's going to walk you through that process. Number two, make sure your marketing is in line. Make sure you have a way to get to a customer base. And number three, recognize that this doesn't happen in a week. It takes time to go through the process. And when you're looking to raise capital, it takes time until the capital is actually raised. Moving money is not easy. And the last point is get all of the parties involved. The parties might be lawyers and auditors and broker dealers and technology systems and transfer agents. Make sure that's all lined up. A singular entry point that's a smooth experience is best, but make sure all the parties are in place when you're getting ready to go.
Nate, words of wisdom.
I make sure that you nailed it. But the broker dealers, I think, is one of the most important things in the world to have to stay safe. Core connects to really help manage and maintain the cap tables and what's going on with everything. I mean, it is about the team at the end of the day. Most people don't know who the right people to work with. If you're listening here, you're seeing some of the right people right here on the screen, which is kind of the first go round. It does take a little longer, and there are the different team members that you have to put together and work with. But at the end of the day, this is setting up a business. It's not like I just have one idea for some small property or some small fund. Ultimately, this is an ongoing platform. You need the right people because you're going to be working with them hopefully for years.
Mm-hmm. Yeah, I think for me, kind of the words of wisdom are number one, look, this is a sophisticated offering in a good way, but you want the right team. You want good legal. You want a broker dealer on board. You want to have good technology. I mean, you're getting ready to execute what amounts to a public offering. You're getting ready to solicit people to purchase securities. You're going to probably be dealing with a lot of people buying securities in your company, hopefully, if you're successful. And so you really want to make sure you've got a good team there because you can quickly become overwhelmed. And so having a proper team on board, having good experienced people to help you through the process is huge. And then I think the other thing is being able to offload a lot of the administrative part of this onto technology like Core Connects, to have the broker dealer there backstopping you, having Rialto's compliance department backstopping you and 50 state licensed FINRA broker dealer that the sales are going through. I mean, these things are huge. And I think part of what I would say is, don't try and bootstrap putting one of these in place. Come in with a good budget, come in with a mentality that you are going to spend some dollars to put this in place, but you're putting something in place that's sophisticated. And the other thing that I try and get people to look at as well is that ultimately your time and effort matters. If you're a syndicator, you're going to go raise capital on out in the public. What type of vehicle do you want to use? And what type of vehicle do you want to have? Because you're going to spend time and effort either way. Yes, there's Reg D offerings that fit well with what a client may be doing. You might have a client that's got, some accredited investors lined up, or they got a family office lined up. Great. Do a Reg D 506C. It's a more simplistic offering. But I think when you start looking at people that need to get public exposure, that are going to be raising larger amounts of money, the extra time and effort to get through a process like Reg A Plus and have that kind of vehicle that is going to maximize your ability to raise money and maximize your time and effort that you're putting in, that matters. So I think for me, the words of wisdom are come in well capitalized, pick the right team. Again, there's a lot of talent right here on this board right here as far as the presenters go, and make sure that you're coming in with the mentality that this isn't a 30-day process. It's not a process you should be bootstrapping, but it is something that if you're ready for it, it's a fantastic vehicle. And I think with the changes that have been made vis-a-vis the SEC on these programs, I think with the fact that the emergence of social media, obviously over the last 10 to 15 years, and then combine that with the technology that's available, it's really made a fertile environment to go raise money. And it's just an exciting time to be in this business.
Wow. Agreed. We do have one person that I'm going to give him that shot to come in. Nick Joel, he's got a question for you, gentlemen. Nick, you're on.
Yeah, I just had a brief question on the cap tables. Could you elaborate on the cap tables you mentioned?
As far as the management?
That's probably for you.
Oh, for me. Well, listen, I think what they're saying, Nick, is that you have to have your book of records well prepared. having your cap table well organized when you're doing an offering is critical, because you need to disclose that to the SEC. They need to understand the capital structure, what securities you've issued, what kind of securities you're legally allowed to issue. One of the things that they mentioned, they don't want to hear about surprise agreements. Well, same thing here. What if you have a promissory note that doesn't get disclosed? So having that organized, there are tools now today, and thank you to my colleagues here today for mentioning us, but there are many others as well, that provide the ability for you to manage your securities, shares, options, warrants, on all that, so you can start making that journey. And that's just getting the preparation. And then afterwards, well, that's a totally different game, because now you may have thousands and thousands of shareholders, which when you're successful, now you need to look at this arena a little bit differently. You're still managing your cap table, but now you're managing it alongside with thousands of shareholders. So you need to think of a solution that combines those two together. So the good thing is those solutions have been built. You don't have to, it's not something that wasn't there. Otherwise, Reg A and Reg CF would not be successful as it is today. So Douglas, thank you today for coming in. I really appreciate this.
Yeah.
Joel, it's always good to see you. Nate, you're looking good. Thank you so much for the three of you. Great insight for this afternoon. The preparations are so important. Sometimes they're overlooked, and there's good guidance here from each of them, giving you all the things you need to do to prepare. But one of the things that when you are ready and you have all of the elements combined, it is an amazing ride that you will have in Regulation A. And with real estate, there's one thing in particular that's really, really interesting that we're starting to really see, and it hasn't been 100% on yet, but we believe it's coming, and that is IRA. We all hear, IRA is a critical part of real estate, and I brought today a special guest. Bill, it's good to see you. Nice painting as always.
Thanks, Oscar. Good to see you as well. And so far, so good. Thanks for having me.
Yes. Yeah, so far, it's been great. Listening to Nate and Joel and Douglas, again, they kept iterating all the requirements that a company needs to do to prepare, in particular when you're doing a real estate offering for Regulation A. But this is a part that I often see a lot of companies look at it as sort of like an afterthought. They go, oh, you know what? I think I should add IRA. And in the past, it wasn't something that was immediately brought on. But now that we're bringing an asset class that tends to, lend itself for IRA more often, I would like to kind of explore that with you. But before I do, it would be rude of me, and it almost stopped. Please take a moment to say hi to everyone. Introduce yourself, please.
Hi, everyone, and thank you for inviting me to this presentation today. My name is Bill Humphrey from New Direction Trust Company. I am the co-founder and CEO of New Direction. We've been around about almost 20 years now, so thanks for having me.
Thank you. So, as I was alluding, so in Regulation A, it hasn't been the big investment. Sorry, the vehicle to date where people are putting in their IRA dollars. So let's talk about IRA in general, how people use it, and then obviously it's been used a lot in real estate. And I'd love to hear your insights on that, because you being one of the co-founders of New Direction Trust, you would have a fairly good idea of that kind of sector, why it's been so privy to this investors.
Well, it's a great question, and particularly for us. So real estate is the reason that we started New Direction in the first place, because the other co-founder, Catherine Wynn, came to me one day and said, hey, I keep getting sent to the stock market. I keep going to Wall Street. I don't know anything about Wall Street. All I've ever done is invest in real estate. Why can't I do that with my IRA? And lo and behold, you can. You just need a custodian that's willing to allow you to do it. So it's an entire asset class that until more recently has been excluded from securities markets entirely. So most of our clients would invest their own IRA directly into a property rather than going through an offering. So all of their money would go into one or maybe two, sometimes three different properties, but you can't diversify very well with that approach. So with Reg A and Reg CF, now suddenly people can put smaller amounts in more properties, and rather than swinging for the home run, get a lot of singles out there in the marketplace. So it's a very exciting time for New Direction and for IRA investors.
And it sounds like you're going through your own construction in the back.
Yeah, sorry about that.
It's okay. You're using your IRA dollars to rebuild your home.
Yeah, I wish.
So, okay, so it's interesting. So obviously this new custodial role, and we're seeing a number of them, and your firm being one of them. But and typically the way we've often seen IRA used has been in big investments where it can have a tax effect on the investor. So they would tend to use, but now we're dealing with smaller amounts of capital being injected by a company, but that should not prohibit them from using their IRA accounts, correct?
Absolutely correct. That you can do any amount. Costs, you probably don't want to do a $10 investment, but $2,000, $5,000 and up makes a great opportunity for your IRA to get into something that you wouldn't be able to buy all of, but now you can buy a sliver of it, and you decide what size that sliver is going to be.
That's it. So that's good to know. So we finally got it down to the point where someone can participate. And this is a good thing for everybody to hear who is looking to doing a RegA and using an IRA or would like to add that to their process during the time the investor is looking to invest, is how does that fit in? And should I add it, even though it's a smaller amount, as Bill just indicated, if the investor's investing, as low as $2,000, which this coincides with the average investment in RegA, which is around $2,500. It's not a bad way to approach it. But there are some interesting changes coming about, and I'm going to twist it around a bit because now that we're hearing about IRA, I was in a meeting earlier today, and someone said, "Well, Oscar, I don't want to add it because what if I have to refund that money?" And I really didn't. At that moment, I'm going, "Why would they think they need to refund it?" But that's not the case what's going on. So there's this talk, as you know, within the administration, the current administration, that the IRA, that the ability for people to use it, in particular accredited investors to use it, I think that's the bigger element, that they would not be able to utilize the tax component of it. Can you just give us an overview of what's going on there and what impact it could potentially have in real estate in general?
Sure. And of course, what you're talking about is proposed legislation, which who knows until the signatures are wet on the page what it's actually going to say. But as it is written currently, the one name that you need to know, Peter Thiel, he took his IRA and started with $2,000. It's now worth about $5 billion. Yes, B with billion. And the Congress is after him. So they're trying to figure out all the ways to stop rich people from getting richer. And the way they're doing that currently is to say that anybody who wants to make an investment that requires them to be accredited won't be able to do it with their IRA. So that's different from the way it is today, because a lot of people invest both accredited and non-accredited in a wide variety of assets, but it mainly is going to impact Reg D offerings that require accreditation, which fortunately doesn't impact Reg A or Reg CF because they don't require accreditation. So there's lots of options left, but the Reg D, which of course tend to be larger dollar amounts already, they are currently going to be prohibited from being able to be invested in with IRA funds.
Okay, so that's a good. You know what? You brought up a really good point. The proposed changes by the administration are really, it's about targeting the accredited investor, and obviously we don't know where that's going to go. But that's not prohibiting the non-accredited investor to keep using their IRA in a tax shelter environment where they can use it to make further investments in real estate companies or any other type, right?
Correct. And the whole Jobs Act is aiming at you hear democratizing investing. And the people that have money, smaller dollar amounts, most often they have that money inside an IRA. So they want to be able to invest for the future. They're probably going to need to invest their IRA funds because they don't have as much liquid capital in their pocket. I know something's wrong with my pocket. It tends to leak. But once I get that money in the IRA, then it tends to stay there for longer term investing. Perfect for Reg A and Reg CF.
So let me ask you this. I mean, obviously the adoption, everybody's trying to get the investor to use this. What would you say would be kind of the barriers? Why do you think there may be a barrier from the investor side to either say, yes, put that into an IRA account or this and that? What do you think some of the things they're going through? Because I think everyone needs to understand, because obviously we're talking $9 trillion sitting there, right? So clearly there's an opportunity, but what is it that we're missing?
So probably the first thing that's missing is education, that you can actually do it. Because if you call Fidelity or Schwab and you say, I want to invest in a Reg CF offering, they're going to say, oh, no. And the reason they say that is because they don't want to do it. It's not that you can't, it's that they won't let you. So you need to find a custodian that'll both educate you about how to do it and let you do it in the first place.
So that's interesting. So what you just described here, I think this is really interesting. I don't think anybody caught on to the little nuance. And that little nuance is that we're talking about a two-tier type of IRA custodians. There's the top tier, and they're not allowing, or they're saying no. They're not saying you're not allowed, you're just not allowed to do it with us. And there's another tier of IRA custodians that do allow to put money into privates. And that's where the education needs to come in. Did I get that correctly?
You got that correct. Only you need to switch your hands. So the top tier is the self-directed.
Self-directed. Okay.
And the lower tier that limit you, they say, Oscar, we're only going to let you invest in these things. And they give you a list. And it's mainly publicly traded stuff. When you come to a self-directed provider, they say, Oscar, what do you want to invest in? And there are a few rules about what you can do as it relates to you personally, but any investment that you can do with your personal cash, almost all of them you can do with your IRA. And a self-directed provider lets you do that.
And that's coming back again to what you were saying. That's where the education comes in. So for everyone listening in, this is really important because, you know, we get asked this question a lot. I believe everyone does. And we always say, yes, of course you can add IRA, but we also need to look at it. What are the barriers? And more importantly, I think what people need to do, and I think anytime I hear the word education, it's not enough to just say, we take IRA. We need to provide some further information to that audience to let them know what the IRA is and what this means, because they'll, to your point, they'll make the assumption, go to Fidelity or Schwab, and they'll say, no, we don't touch that. We don't. And then all of a sudden, you're just lost an investor because they weren't properly given the instructions, because not everybody knows this information. Obviously, you do because you're in the market. So from outside of the education side, so the investors they're there. I mean, my experience and just viewing it is that obviously there are a handful of these providers that provide the custodial services for people, and then there's the company raising its capital. And how do you do it when you work with one IRA custodian? Then the individual would have to be moving $1,000 or $2,000 from one IRA custodian to the other. I mean, is this a feasible model for companies to operate in the background to do that, to raise this capital from IRA, or is there just something different here?
Well, great question, Oscar. It's so that once you become educated enough to know that you can do it, then the question is how. So if you're looking at writing a check from your bank account versus having your IRA invest, writing a check personally is easier and faster. But with an IRA custodian that is built to handle those kind of transactions efficiently and easily, then the process becomes faster and more automated. You still have to move the money into the IRA, because remember, I like to call them Uncle Ira. So it's your money and then Uncle Ira's money. So Uncle Ira is the investor, and Uncle Ira has to write the check. That's what your custodian does, to send the money to the investment. And the paperwork is titled in the name of Uncle Ira. So you're still in charge of it. You're approving everything, but Uncle Ira is actually the investor. So once Uncle Ira is created, so currently we have about 19,000 IRAs. Most of those IRAs have money, and all of those IRAs could immediately invest in a Reg A offering because they have the money there. If they have their money at Fidelity or Schwab, then shame on them, but they should move it over into their new self-directed account as soon as they can, if they want to invest in those kind of assets.
You know, that is a look. All of us. Hey, you know, this is just the person I wanted here, because you know where he is right now. This little bugger is in Denmark, and I'm very thankful that he's able to chime in, because right now he's all the way there, sending beautiful pictures. By the way, beautiful pictures, clear water. Love the fish. But it's investor acquisition providers, and Andrew has been one of the longest running operators doing this. I mean, obviously we're trying to reach the largest net of investors, and we're trying to use IRA, but it's rather interesting to hear that there's still one more step before we just say IRA. It's not enough anymore, because we're making that assumption, as you just alluded to, Bill, that the investor may not understand yet that this particular investment has to be with another type of IRA custodian. And that's an education piece. That I think is something that will help everyone, because it's something they need to consider as if they're going to open that up, which I believe they should, because it's $9 trillion. I'll remind everyone, it's $9 trillion. We just need to find a way. And I know Andrew's like, you mean I need to teach people another thing? I mean, come on. But it's I think it's worth it. I just, you know what, it didn't clue into me, and just listening to a little bit longer with you. I know you and I, Bill, spend a lot of time, and thank you again for this afternoon. We're going to be continuing this discussion. So as you all know, look, there's something really interesting going on. If you're really curious about these new administrative changes regarding IRA, please reach out to Bill. They're looking at lobbying this as quickly as they can. There's some work to be done there, but overall, IRA is not going to go away. It's not going to affect the non-accredited investor, which is great news, because it's going to be a key. But as he just alluded to, we're going to have a lot of education to do along the way. So, Bill, enjoy your afternoon. Make sure though your new home extension to your mansion is doing well. Okay, be good.
Thanks, Oscar.
All right. So, gentlemen, Andrew, it's good to see you. Jose, nice to meet you.
Nice meeting you.
Yeah, likewise. So we're waiting for our colleague, Mr. Fishman. So who should be making his way through, unless there was anybody read the news? Anything happening in California? Any weather breaks?
Any new ones, you mean? If I could weigh in on the IRA thing for a second.
Please do.
While we're waiting. So, the IRA, I've invested in private deals by opening a self-directed IRA, and then I have my traditional IRA money. And there's instances where I think the IRA makes a ton of sense, and there are instances where it may not. We have a kind of real estate deal we're doing now. It is essentially you're investing in a mortgage pool. The deal pays 7.5%. It's extraordinarily secure. And that I don't know if I would do that in an IRA that's self-directed. The fees are higher with those types of self-directed IRAs. So something like that that's pure income, I may say, oh, gee, I'm just going to do that in a taxable account. A different deal that I'm working on is a very specialized hotel deal with Phoenix American. And there, there's an 8% preferred return, but you're there for the upside as well. And the upside might be 15%, 20%, 30% total IRR per year. That I don't want to pay the tax on. So certainly if I could defer it and put that in my IRA, I would. I've invested in that one for my kids. So those are in trusts. And anyway, I did my test one, which I know you've seen, Oscar, which I just did in a direct account. But when I make a larger investment, it will definitely be through my self-directed IRA.
But it is interesting, though, what he said there. I didn't catch on to that nuance with Bill before. And you know, it's funny. Like every time I speak to all of you, I learned something because you're paying a little close attention. And one thing that just drew to my mind to ask, so even though with all this grand noise over here and all that, where is the roadblock? And he said it. What we didn't know is if somebody was even thinking about using it, just bear in mind what he said. If somebody was even thinking about using it and didn't have any information on the site, their immediate jerk reaction is to go back to Fidelity and Schwab, and they would say, no, no, no. So it becomes the red flag. And I didn't even, at that moment, that's when I said to myself, wait a minute, we're kicking people out and we're not telling them what it means to. So it's an exciting, I think it's a great frontier, and it's great to have partners like Bill Humphrey to provide that insight. Mr. Fishman, it's great to see you, my friend.
Thank you, Oscar.
We were afraid that something in California, either a forest fire, a tornado, water flood, I don't know, you know, but you're here. That's the important thing. Gentlemen,
I am here, excited to be with you. Always a pleasure to participate in the core summits and with yourself, Oscar. Andrew, pleasure to be on a panel with you. We're big E5A fans here and excited to be on. Jose as well too. Send our regards to Krishan. Excited to be on with everyone today.
Gentlemen, have fun, and don't forget this is the whole day got started on real estate. One of the things I don't know if you heard the earlier conversation, prop tech and real estate is emerging. Really exciting to see that. And obviously you heard the preparation, all the items. You're a vital piece to all of that. If there's one thing about real estate that I really like, is the visualization. I was just shown a video about a brand new, I don't know if you guys ever been to Dubai, but in Dubai, everything is big, right? They're now building. So they already copied the eye. They already copied. So what's next they're going to copy? Obviously, another great wall. So they're building a great wall. So it's so I leave you all. Enjoy it. I will come back and get you later. All right. Cheers.
Excellent. Excellent. Well, excited to be here with everyone today. Did we already go through introductions? Did everyone already talk about groups and what we're currently doing in real estate equity crowdfunding?
No, we did not.
Okay, why don't we start there? Jose, you want to kick things off? Tell us about all the amazing things Aurora Project is involved with, yourself and your focuses as well.
Sure. So I'm the director of marketing at the Aurora Project. I create all the strategy, implement all the plan, make all the changes, and make sure that everything's running smoothly. To date, we've raised, I believe we're at $120 million right now, mostly through Facebook and Instagram. We've also dabbled in LinkedIn, and we're specifically going to try TikTok now, which sounds a little crazy, but the watch time on TikTok actually surpassed YouTube. That's an insane stat right now. So we have to create special content for there just because we can drive more traffic at lower CPMs, and you will convert it on the retargeting later on Facebook. So it's pretty interesting what we're doing and all the plans that we have for the future to help, founders raise the equity they need to succeed.
Excellent. Excellent. Always enjoy conversations with the Aurora Project. Success record is loud and clear. So thanks for sharing that. Andrew, what about yourself? What about E5A, real estate involvement, and just overview for any listeners that have not had an opportunity to speak with you yet?
Well, if there are any listeners who are on a core summit and have not had the opportunity to hear me, I'd love to meet them, both of them probably. Same as you, and good to see you both. And actually, we just made a referral to Jose's company earlier this week. So I don't
That's
remember if
awesome.
it was
Thank you.
directly to you or to one of your colleagues, but anyway, it wasn't real estate in this case. So we have been involved in real estate raises since just about the day we opened our doors. When we opened our doors, it was financial or investment product, ETFs, hedge funds, mutual funds, and real estate. And we were involved in real estate before equity crowdfunding was a thing, doing essentially Reg D aimed at other institutions or advisors. Of course, that is all expanded with Reg A Plus, and Reg A Plus at 75 million makes it more viable. We tend to work on larger deals. We don't work on many things under 20 million. So we are a systematic data-driven investor acquisition firm, doing the financial products and of course, real estate. So we're working on a few real estate deals right now in the equity crowdfunding world, but I want to mention that we've looked at some of the equity crowdfunding deals at 75 million and said, you really should be raising 250 million, help them convert to a Reg D, help them become a QSIP on custodial platforms at broker dealers and at independent financial planning firms like an LPL, a Schwab, et cetera, and then run a very, very different type of campaign only aimed at them. Most of the real estate we work on is essentially two plays. It's an asset-backed yield play. So we live in a yield-starved world, and especially people 40 and over, 50 and over, 60 and over, they all want that monthly income if it can be paid monthly. And then, of course, there can be upside if it's an equity deal, which is great. So although we work extensively in TikTok and on TikTok, we don't in real estate. We work on Reddit. We do sometimes go with real estate there. And of course, there's a couple of million websites. And then, of course, there's Facebook and Instagram and LinkedIn and Twitter and everywhere else. Our whole thing is audience discovery and data. And we're having a great time, especially in this day and age. You can't fight demographics. People need income. Interest rates are low for a long time. Real estate's a great alternative yield product. So it's just a matter of, does the audience understand an alternative yield product, or what are you selling them? And sorry I went on so long, but real estate's hard to not hit kind of all those different silos.
Absolutely. There are so many silos, as you mentioned, different complexities. I know the marketing is to make it seem as straightforward as possible, really highlight the deal points. I want to get into that and talk about strategy a bit here in our perspective, that's where a good marketing campaign, a successful initiative begins. I should add as well, too, I'm getting told to do an introduction for myself as well. My name is Jason Fishman. I run a marketing agency called DNA here in Los Angeles, California. We've worked on over 200 equity crowdfunding campaigns to date. Real estate is definitely part of our portfolio, and we work with several funds on investor acquisition that they could point at for new projects, new properties. They feel very quick. I'm always amazed by the numbers that are produced in this field and see this element of the digital investor acquisition world to be primed for growth beyond other verticals at that. So excited to be part of this conference here today, talk about some of the channels we use, the approaches, so on and so forth. Also interested to hear firsthand. I'm probably the #1 fan for this panel, I may add, just to be able to hear what you guys are doing and be able to share different insights. But as mentioned, wanted to start the discussion now that we've done intros around strategy. I'll often see groups so focused on the return on ad spend numbers, the return on marketing spend, what is the cost of capital, and even overlook some of the fundamentals of the marketing plan. What are we going to be doing? What are we going to be setting up? What's physically going to be rolling out to generate leads, nurture those investor leads to the point of conversion, as the average investment here is higher than, let's say, a Reg CF or Reg A Plus campaign. So want to be able to speak to that today. Jose, what recommendations do you have for anyone in the industry, whether it's founders or any groups that are trying to put together these deals and see how marketing and overall investor acquisition could take place? Where do they start? What type of roadmap, what type of plan? What is the strategy that you point them towards?
Sure. So, I mean, it's pretty simple, right? First of all, I always recommend you work with an agency, just because whichever agency you work with, they're going to have the investment audiences that are going to convert. So you don't got to start guessing, hey, where am I going to find investors, right? Like us, we have thousands of investors. We have them separated by so many segments, how much they've invested, how many times they've invested, the value of each investment. So we can create literally different segments for each type, and depending on the offer that we're pushing, we will use those lookalikes, right? So always go with somebody who has those investing audiences. Then next, somebody who knows what creative is what converts, because there's so many types of creatives. You could think that some creative works and it doesn't, right? Like how much text are you using in an image will depend how the Facebook algorithm is pushing you to the different platforms and the cost that you're paying per 1,000 people, per 1,000 impressions. So you need to be cautious about how much you're paying for 1,000 impressions. What's your cost per click? And just make sure that you're driving enough traffic where you're growing a retargeting audience that, as Jason said, you can teach and nurture over time, so that towards the end of the campaign, when you're using that FOMO, fear of missing out copy, you really convert them and explore the campaign.
Excellent. Hope everyone's taking notes. Those are some real key drivers there. Andrew, what about yourself? What about E5A? How do you guys approach strategy?
So I will agree with everything that Jose just said. We just happen to work in very different worlds. And also everyone remember that I said that we refer to clients. So when I express a different strategy, it is not a disagreement. It's just a different approach for a different type of client, for a different type of raise. So we do not keep records on any investors whatsoever. For us, there's privacy policy issues, all sorts of stuff. We certainly don't keep track of anyone and how much they have invested somewhere. Certainly CoreConnex has that kind of data. They don't share it with us. We don't ask them to, and broker dealers do. What we have is what's known as first party data. So let's just talk about that for a second. Although maybe I should even step back and talk about bigger 30,000 foot strategy, but data is a very big component of that. So basically, Google said a couple of years ago, we're not going to allow third-party cookies, meaning we're not going to take other people's data and then be able to show ads across our network, which is most of the internet, using that. So when we heard that, we said, gee, we're going to build our own data. And we decided, because we do more than just RegA Plus, we're going to start with the accredited world. So step one was saying, let's only get people who are publicly out there saying that they have made a private investment before. So they're known as angel investors. They're all 100% accredited. And we got ourselves several 100,000 of those. It's name, address, phone number, email, which then allow you to create a custom audience in Facebook or Google or other places. We then said, well, what about the rest of the accredited world? And what happens if they are not publicly stating that they've made these types of investments? So we have employed a group of, and I'll fully admit, they're highly paid interns, Berkeley, Stanford, Duke, NYU, Columbia, all data science majors, to help us figure this out and start collecting them. And we have a different group that is now building this, because now that we've got north of 1 million of them, now it's time to put that into a more searchable database. So to me, that's like a great asset. And it's something that an agency should have access to. But everything goes back to, why are you using RegA Plus? Why are you doing crowdfunding at all? What is your offering? And we look at things, I was an equity portfolio manager for 9 years. And the first question I ask is, would I put my money in? And If the answer is no, they're never going to be our client. It doesn't matter how much money they have to pay us. But assuming they have a really good deal, they've got a good management team, we don't work with first-time funds. We only work with people where this is their multiple. The URL and offering we just launched actually is fourthoffering.theirurl.com. So that's part of the strategy. We want people to look up at that URL and say, fourth fund, and the first three were institutional. Oh, well, then why are they going equity crowdfunding? So all that goes into developing a strategy. And this strategy essentially is, what does the investor want and why? Is now the time for it? Can this real estate firm, developer, fund fulfill that? Because to us, it's not millions of people getting to, it's the right person at the right time with the right message in the right medium. And anyway, so I'll turn it back over to you because I could do another 40 minutes just on this topic.
And we have time, so we'll be hopping into more of those answers and appreciate breaking it up. But yes, you guys can tell listening in here that Andrew and his team are doing this firsthand. Sounds like you've seen things work, have found different learnings when the performance isn't quite there. You've been able
our single largest real estate raise was $1 billion. So
I've always noted that.
That's a single raise. And we've done many 300, 500, 600. Those are not equity crowdfunding. And those are definitely not even second time funds. But they are doable, they are performed, and they actually follow more the pattern that Jose was talking about with the pulling them in, building it, and then actually humans closing them. And as everyone knows, I do way better with data than with humans, so we have nothing to do with closing anyone, but we're really good at helping figure all that out and drawing them in to begin with. So when you bring that down to retail, then what's your strategy and what's your messaging and what's your medium? And when you said cost of capital, that is something we're, painfully aware of every day.
Oh yeah, I'm sure it gets brought up in client calls, as does ours. So I wanted to highlight that, and prospective calls at that, groups that are trying to figure out equity crowdfunding. And, we were asked to talk about strategy because I'm told it's a missing piece for some Reg A Plus campaigns that are going live these days, and something that, Oscar and his team are emphasizing to groups. It's certainly something we focus on. We have a system called the 8-point plan. It's just a way to streamline this process, compartmentalize it a little bit, and it works in sequence. We do an industry overview to bring our team up to speed with their market, with everything that's going on in that space. So we're not asking questions that are basic at any point. We want to be able to have those discussions, and we're always finding new tips while doing so. And then the competitor marketing audit, where we want to know exactly how other groups are doing it in their space, even if it's offline. We want to know who the key audiences are that they're using to close their round. We want to know if they're reaching them over email, phone, direct mail, advertising, as Jose's mentioning. What channels are they using? We'll pull up the exact ads in the Facebook library and have other tools to look at their Google copy, even in many cases, how much they're spending and what they're using to target. We look at their organic content, which publishers are talking about them, what day and time of week they're posting on their social channels. Success leaves clues. We want to be able to take those learnings and apply them to the groups that we're working with. We then build out a framework for the plan with, if nothing else, builds an alliance between us and the client. And I recommend founders to do this with their internal marketing folks if they're not working with an agency. But like Jose said, if it was my group, I'd certainly be working with an agency because of the data, because of the findings, because of everything that Andrew is mentioning here, based on their success. You want your brand to have the best shot at the total goal, and in the quickest period of time that you can, from the right investors, the right individuals, as Andrew was mentioning there. So we map out, and in sequence, the target audiences based on what we found from the research, the marketing channels, because we now know where the target audiences are online and offline. We know we could have a presence there organically with content marketing and advertising with paid channels. We map out the creative. So out of the gate, they know, hey, here are the visuals, here's the copy that we're using, here's the third parties that we're going to reference to validate the deal across the marketing and or the offering page, any stage of the funnel to nurture that audience. We do a section on strategic partners and do a messaging map and sequence. Then everything goes into projections. As Andrew was mentioning, it's very important to have that laser focus on the cost of capital. We build an algorithm consisting of 3 stages: impressions, clicks, and conversions. So if something's not working, we could pinpoint it. And instead of telling a client, hey, the TikTok ads aren't working, we could say, hey, we're getting a good click-through rate here. We're not getting the conversion rate we want. We want to focus on a landing page. We want to focus on the messaging and a stronger call to action. What can we do at this stage? This part's working, but what can we do at this stage? It makes it very focused, very organized, and we can really look to improve a channel to manage it to a point of effectiveness rather than write it off, and show how the campaign gets to its goal. Was actually on a call earlier before this of a group that saw strong performance week 1. Week 2 was a little slower. From the time they scheduled the call to when we hopped on, their performance has already picked up. And this is a client that didn't go down the strategy path with us. So, we have to point out the timelines, reemphasize them, where if it's already aligned, if we know, hey, month 3, this is when we're looking to see these goals hit. Month 4, here's how we're scaling up. It just becomes that much more of an agreed upon approach for everybody. And then we summarize that process. So that's our approach to strategy. We like to have a plan right out of the gate. But we already started talking about channels. I want to talk about channels a little bit further. When I work with different VCs or investment groups, they'll often question advertising and say, is this an accredited investor really going to click on an ad? Are they going to be giving us millions of dollars through that advertisement? Because again, the average investment is higher here than on a campaign that may live on a FINRA regulated equity crowdfunding portal for Reg CF or Reg A plus. And I speak to why, but curious on your recommendations. Jose, you already gave a few great insights, but what do you speak to in regards to channels? How do you guys acquire investors? What type of pushback do you get on those channels, and where are you seeing commonly the most performance? What combination of channels?
I mean, this is simple, right? When we think of channel, we think of how difficult or what's the mass appeal that this offer has to an individual channel, right? Like if it has mass appeal, then we can go more broad, like Facebook and Instagram. And if it's more focused, harder to understand, then we have to go maybe more LinkedIn focused, right? And target specific industries. So that's where we choose what channel we're gonna pick. Also, before we start the campaign, we look at the landing page and make sure that it's correctly written, and we dumb it down. That's the number one thing we always say, like dumb it down so that anybody who lands on this page understands what's going on. The more complicated it is, your conversion rate is going to drop. So you always have to be mindful of your conversion rate. So I would recommend always dumbing it down and making sure that everything is written correctly and perfectly. Because if you make too many changes once the campaign is live, that's called a material change, and you're going to have to reconfirm all the investments that were made. So like you can make smaller changements once you're live, but not too many. Like you could change the thumbnail and make it more actionable. You could change the headline and make it more actionable, but you can't make that many changes. So I would just be careful of landing page, smaller changes that you can make in the future, and the channel based on how easy it is to comprehend the offer.
Okay. And Andrew, you hopping into channels already there too. And I know you had more to say. Hope we didn't cut you off or anything.
No.
What are your thoughts when people ask about, hey, how's this going to happen? What is IA? What role does investor acquisition play, and how do you guys?
So first, I want credit for having coined the phrase. Come on,
okay.
Let's give it up. It's because I was talking to Oscar and he couldn't understand what it is that we do, and literally I was like, we acquire investors. That's all we do.
I was not aware of that, but I've heard Oscar say it early on. So
no.
I will point to you.
There we go. If for nothing else, you can give me credit for that.
You got it.
So a lot of things, again, I agree with what Jose has said, and some things I don't. When you're looking for a high median investment, and this is a dirty secret in Reg A plus, is you're looking at higher household incomes. You just are. When you're doing something and it's a Reg A and it's AI, it's some technology thing, and you want $100 minimum investment, or it's an entertainment thing and people are going to jump on, that's great. With real estate, especially if there's yield plus capital appreciation, or meaning an upside when they sell the real estate, and there I go, making it easy to understand, dumbing it down, as he was saying. That's great. And we have a lot of translation into English that we do. Someone will come in and say, well, I've been involved in industrial real estate, commercial real estate for 20 years. And I'm like, yeah, we don't want to call it industrial. It's not so sexy. And they'll be like, well, that means warehouses. And it's like, yeah, that's still not exactly something everyone wants to throw their money into right away, especially for, keep in mind, it's usually 3, 5, 7 year hold. So then I'll say, well, what you're really talking about is e-commerce. Look around the room. What in the room did not go through a warehouse before it arrived in the room you're in now for everyone who's watching this? So all of a sudden, then it is understandable. And what we're looking for is what's going to get that aha moment where they're going to say, oh, I get it. This is kind of the back office-y part of commercial real estate. But not only is it important, but you look at 2021, e-commerce has just exploded with COVID and is never going back. It was already on a huge trajectory. So every part of commercial real estate has a different thing. And, the last year, multifamily, or as we like to say in English, apartments, in big cities where there's a lot of price discovery, so you can't find great deals. Let's take New York. New York was, oh no, I'm not doing multifamily in New York. Everyone's abandoned the city. And now you're seeing absolute record prices for apartments and buildings. So yeah, everyone who was frightened back 6 months ago should have put their money in, because now we're at record prices. So how do you convince an audience of that? And is that even right for crowdfunding? Can you convince a retail audience of that? And, when the VCs say, wouldn't a accredited investor click on an ad? Advertising works. Now, sometimes advertising isn't, I show you an ad, you click it, you make an investment. And Jose alluded to this. I show you an ad, you click it, you come, you learn, and then you're going to get brought back in retargeting. So explaining that again, more simply, is you may have to see an ad 15 times and in different places that you trust. If it's Facebook, it might be on your high school girlfriend's page when you're stalking them. If it's on Instagram, it may just be in your feed. If it's on the web, maybe it's on a high-end travel site, because I'm on vacation right now in Copenhagen, but Oscar twisted my arm, and who can turn down Oscar? So here I am. But then where else are you seeing it until you trust the name? And then eventually you're going to come to that page. And then trust has to be built, because I'm not writing a check for $100 and doing it on a credit card. It's going to be $15,000 and I'm going to ACH my money. So it's just such a different thing than doing your standard Reg A plus. And, it might be they take 20 times seeing it before they react, or it might be infinity and they're never going to. And a lot of that goes back to messaging and is it the right audience and all that other stuff. So, the channel is determined a lot by what the offering is. And we say 4 things: test, measure, refine, optimize. And with that, you're going to get discovery. You're going to make data-driven decisions. We literally can tell you that investor A clicked on a 300-250, which is the physical size of an ad in pixels, and what website that was on, or it was a specific Instagram ad. So that's known as what's called last click attribution. And people, I don't care, that's the last click. Was there a first click? Was this their second time back, their third time back? Did they watch a video? Did they download something? Did they spend more than 2 minutes on the page? Did they complete the investment when they clicked that investment button? Or did they only do a little of it and need to be brought back yet again? So all of these things are part of the consideration set and need to be orchestrated together to have a successful campaign.
Yeah, and Andrew, I love what you said about the story. It's so important that you tell a good story. You know how you said that you changed the warehouse to like what everything's in the room. Like being able to tell investors a great story and building their trust. Like I'll tell you a little hack right here that we do. Little hack that we do to build trust is that we hit you with on Facebook or Instagram with different handles. So you won't see, we make it seem like everybody's talking about this investment, right? So that's like a little hack that we do to build trust. Like you said, hey, you see it on Facebook, on Instagram, then you go and you see it on a news site that you're on. It's like part of it is how do we convince these people that we're real, that we're good, and we're gonna take care of your money, And we do that through using different handles, through doing campaign updates, saying updates of what's going on, the progress that everybody's making.
So I understand you. Can you explain to everyone what different handles are, please?
Oh, different handles is when you're on, let's say you're on Facebook and Instagram and you're creating an ad, for example, you could have 100 different pages, right? So you could run page 1 out of real estate investing. Page 2 could be real estate news, the 24/7 news, real estate news, something like that. You just hit everybody with different, you just hit the same people with different ads from different sources, and it makes it seem like this is the best investment ever. The whole world is talking about this, like how am I going to miss out? And that's just one of the ways that we use to build trust and really blow people's mind.
Yeah, we used to have them set up for different audiences too. I learned this when I was in social gaming and user acquisition there, where we could have gaming moms, gaming dads, gaming college students, clever names, as Jose is mentioning, of course, but can build those pages simultaneously, have audiences developing from that niche, have the narrative there. And then as Jose is saying, that third-party validation. So there could be an activation where all of these pages, all these sites are talking about it. But either way, even if an audience only sees one, it's coming from a third party. Digital marketing as a whole is built on creating social proof. People don't believe what they see online. So if I tell you, hey, I have a great product, or if other trusted third parties or third parties that appear to be established are talking about how great that product is, it serves in a louder fashion. And Andrew, data is everything. When I get asked about the channel questions, I say something exactly like you do with data-driven. We actually have a model called Test, Optimize, Scale. I love the similarities there. And I hear different ones for each agency, of course, too. But Test, Optimize, Scale, it's in my podcast as well, too. I break everything we do down into that. Any channels that we want to test and we prioritize which ones we want to roll out of the gate first. We can't scale. We have to optimize first, but we can't scale until the data tells us it's working, until the numbers are actually validating what's proving it. Anything before that is just assumption. We know what channels we want to start with from the target audience research, which stem from the competitor audits. As Jose's mentioning, media buying is a big part of this because we could control how much traffic is going through. We could upload our investor audiences. I spend a lot of time putting together more audience data relationships for groups that we can advertise for this. As you're mentioning, Andrew, high household income, net worth, investor behaviors. That's actually how we started, was working on Reg D campaigns to accredited investors and tapping into third-party data sources. We've since been able to develop our own first-party audience data, have run campaigns to over 20 portals to date, have worked on various types of campaigns where we had to source different real estate investor data, being able to take them to a landing page, as it's typically a different sales cycle. It's different consideration process, and love all the notes you pointed out there, Andrew, about that. If we're able to take them to an email sign up, have an email drip pointing at long form content that the founders are doing. We like to make it an easy process, maybe once a month, once every couple of weeks, where we're creating this content directly with the founder, filming them. But then in that email drip, we can have articles, videos, third-party coverage of the founder and speaking. Maybe they were featured on a podcast. Maybe it was some type of group pointing at the content, but we want to use the email as the anchor there, and constantly positioning the team as thought leaders in the space, constantly be pointing about all the different product points that would be part of the consideration process for the commercial, for whatever type of offering it is here. Definitely the retargeting ads there too, but we don't want to be saying how about now each time. We want to change up the messaging, maybe different ads for different stages of the funnel. All are different parts of it, and as much third-party validation as we can, whether, as Jose is saying, we're creating the pages, whether it's coordinating with 100 different contacts that the company has so that they're all commenting on posts, or they're sharing posts, or having some type of image or video in the advertisement itself. We really want to have that harnessed here.
Yeah, so I'm going to jump in. We don't really do any of that. And some of the competitive stuff that you're doing, I'm exhausted listening. You do a boatload of work there. I think this is my opinion, is people are writing larger checks are not influenced by what other people are saying on social media. They're influenced by friends, family, respected people who they respect in their own lives, and then in the press. And we insist upon a PR partner, and if they read it in, it doesn't need to be the Wall Street Journal or Barron's, but if they read it in a publication that they're used to reading, I think that's really important. We love to put 6 to 8 logos of as seen in, meaning what press they've been in. We will bring in, here's their Twitter feed, because I know people are working hard on it. I just don't think it's that big of an influence. So it's a contributor. I mean, everything is a touch point, and better to have more touch points than less touch points. It's then a question of what does it cost, which then goes back to cost of capital. I love, and I forget which of you said, sometimes the first 2 weeks are kind of slow, and that's okay, because you're not at full throttle, because you're testing and optimizing before you're scaling, to borrow Jason's words. Now, one of the reasons that we don't do everything that you were talking about is because of 2020 and 2021. I was an equity portfolio manager in 08 and 09, and back then everyone asked, how'd you do? And I'd always answer, well, in my long short, really well. In my long only, I had my butt kicked, but I did better than the benchmark, which when you're raising money, nobody cares. So no one wants to beat a benchmark. They just want to raise their damn money. And when we're doing our calls with clients, they want to know, are we going to get this done? Like, there's so many metrics in advertising that we put there in front of the client, but they don't care. They just want to know how they're doing. And are we on track? And but that 2020, 2021, I mean, I've never seen the mood of the country change so swiftly. I've never seen us have to change ads so quickly. And I know it's a little contradictory to what Jose was saying, but we changed the offering pages dramatically. And we also A/B them, meaning we'll create 2 of them and use both of them. As long as they're compliance / FINRA approved, or if you have real guts, CrowdCheck approved, there's no reason you can't do it and change it. In A+, you can actually change the pages many times as you want, as long as it goes through compliance approval. You can't make a material change to the offering without changing the offer. So I think that's a little bit of a distinction. And anyway, but for us, PR is a huge component rather than social media. I'd rather have it on Market Watch or in USA Today or Yahoo Finance than a third party people don't know chiming in on a Facebook post. We actually erase most of the Facebook comments on ads, even when they're positive. It's like, this person's opinion isn't really something that we want influencing our prospects. So and that's a different approach, and it's not necessarily better or worse. It's just a different approach.
Sure. And the reason we do it is it's part of content marketing for us. And content marketing, yes, we want premium publishers. Yes, we want blogs, podcasts, other types of mid-tier publishers in many situations. But when we're looking at a lot of the top RegA Plus, top CF campaigns and their use of social, when we poll investors and get an understanding of their decision process, there's usually a level of their own digital due diligence. And if they're searching on Google, likely some of the results are going to be their social pages. And if an investor gets there and there's active feeds and it says, hey, we're just focused by Market Watch, we're just featured by Market Watch, we were just on Forbes, we're speaking at this conference next week, or if an investor gets there and there's nothing, it's two different experiences. And I'm not here to say Facebook organic is going to be the key driver, as much as we want to be intentional about what's showing up there. Certainly agree with you, PR, the higher quality, the publisher, the better. But we do want to have it appearing as, wow, these guys are everywhere. So they read the Market Watch article, they're now seeing their social feed. I think you said next to their old ex-girlfriend or wherever it may be. We want to show as much validation as possible because we know that the stronger we do in content marketing, the higher the conversion rate is going to be in the advertising. And I wanted to ask you guys, what do you do when a campaign is not working? When we look at, Oscar's team, they put out a study for 2020 Reg CFs. I think it showed about 20% hitting their goal. Not every capital raise hits its goal. Not every marketing campaign does. There's inherent obstacles for both. And I know our clients really look towards us to save the day if the marketing isn't working first few weeks in, first few months out. Andrew, as you said, they're all interested in the bottom line. Hey, are you guys going to be able to do this? What's the capital? I know it's the type of scenario we can't just work harder. We have to be creative. We have to be intentional. What do you guys do when campaigns are not working upon first push?
Go ahead,
Okay.
please.
So
I've talked too much already. So
no, not at all. Everything's been great. So what we do when a campaign's not working is, one, we cut the ad spend right away, right? We don't want to just spend their money. I always say this, I don't want to spend your money just to spend it. I'm careful about your money. I want to make sure we're using it correctly. So number one, I turn it off right away. Number two, normally we get together as a team and get on a call, and I tell them, sell me as if you weren't, like if I was going to invest in your company, sell me, sell me your company. And we just start taking notes, right? What ideas can we get? What can we refresh? What angles are we missing? We try to see, is there any key influential person we can leverage? Are they influencers that we can leverage as well that would allow us to use their handle? It's so powerful to use other handles. I also that's really it. We come to sell it to us. We look at it. We have to change the landing page to what Jason said earlier, that he's looking at the impressions, the clicks, the conversions. That's basically telling you like, hey, is it the ad that's not working, or is it the landing page that's not working, right? Or a ton of people clicking on the ad because they think the ad is relevant, but then they land on the page and they're like, I don't want this. That's saying that, hey, step one is working, step two is not. Let's stop step one, let's fix step two, and then drive traffic again. Is it that the cost per click is really high, but people are converting? Then the ads are terrible and you need to fix the creative, the copy, maybe some of the audiences, right? So we look at everything, like what is the root cause of the problem, and then we find a way to address it, whether it be, fresh creative, fresh audiences, talking to the founder, like I said, hey, sell us like if we were an investor, like we want to get a true pitch from you. And then just bringing, maybe switching platforms. That's really what we do. And to Andrew's point, something that we used to show a ton of analytics to the clients, and at the end we now show like really little because they don't care. They're just like, well, how much am I spending per week? What is my investment per week, and what is my ROAS? Everything else, you deal with it. So that's what we do.
I know for us.
Go ahead, please.
Didn't know if you want to hop in there. For us, I train my team on being able to focus on three things. I want the client to be able to know our process, to be able to repeat it. People can remember three: audience, creative, and funnel. So we could test different audiences, we could test different creative and different channels at that, but different creative. And then the funnel, as Jose's saying, it's the conversion rate. Okay, what can we do? As Andrew was mentioning, let's look to create something that's more engaging, something that inspires more action on the offering page. And there's compliance factor to that, of course, or a landing page in between. We'll do lead forms that are autofill quite a bit on LinkedIn, on Facebook, on other channels. Quality could vary, but at least we're getting more of that mid-funnel conversion. Funnel referring to their decision process when they're first aware of the deal, when they're considering it, when they intend to invest. We see drop-offs at all those stages. So we want to look at it from that standpoint. And we've had campaigns that showed little to no performance 3 to 4 weeks in. By week 6, have surpassed every performance benchmark we were looking for in the strategy. We've had campaigns that have been live for 10 months to hit their goal. And everyone would love to do it in 2, 3, but if we're able to make the changes to get it there, clients are very happy. Also with real estate, and I was going to ask questions about the sales cycle, how long it's taking you guys to see an investment occur. I mean, we've worked on campaigns that have a $250,000 minimum investment. 50,000, 100,000 are part of the discussion a lot for our real estate discussions. And that's more of a Reg D discussion, of course. But those larger checks as a whole, even if it's a Reg A, maybe $1,000 minimum, to Andrew's point, groups want to have those larger checks. They want to see one come in and that anchor other investors, maybe with the same last name, maybe in the same geographical areas. But it could be a longer sales cycle to get there. So we want to make sure we're not giving up on these channels, that we're continuing to go after those audiences and push them to the point of conversion if they're interested, of course.
Yeah. So let's start with, you guys do more of these in a year than we have in the history of our company. Hearing the number of deals you guys work on, we're not in the same league as you guys. We're smaller, and we work on different types of deals. As I said, we rarely work on anything under 20. We don't work in Reg CF at all. We did 2, and it's a never again. And anyway, a lot of things were mentioned. One of the things you said, a $250,000 minimum. And when someone calls me with that, to me, that's a no-go right there. It's too small for institutions. It's too big for individuals. No accredited investors writing a check for $250. It's got to be a qualified investor. And frankly, I'm a qualified investor. I don't write checks for $250. My asset allocation's the way it's set up. And when money frees up, I'm happy to invest, but I'm not writing a check that big. So, some of it is what is a comfortable amount, and put yourself in the, shoes of the investor. We ask a couple of questions. Who is your absolute best investor? And then who is your most likely investor? And if the answer is the same, then the client hasn't thought it through, which means more work for you as an agency, which we're up for. But we want them to help think it through with us so that everyone's in complete understanding. We also will turn, if things are not working out well, we will freeze, you can pause Facebook, Google, et cetera. I mean, it's like a light switch. You can turn it off or turn it way down so you don't deteriorate your retargeting pool. We don't go back to the client and say, talk to us about it. Our onboarding process is really thorough. We develop a messaging platform before we write a word of copy. We go back to that. We look at that carefully. One of the things we find is that people get cold feet very quickly, and they need to spend more money faster because our learning isn't good if the numbers aren't statistically significant. So if we go through all that and everything goes right and money's not coming in, then we need to stop what we're doing and reassess each part of it. Is it the data? Is it the messaging? Is it, conversion? Is it the technology? Is it, maybe we shouldn't have even offered credit cards because we want, a $2,500 minimum because it's real estate. Or like the deal I mentioned before, it's just pure interest. You're investing in a loan portfolio. If you're only going to put in $1,000, what are you doing on a 7.5% annualized return paid monthly? Why are you putting in only $1,000? So yes, we want to democratize it and offer it to people like that, but the median investment should be much, much higher. So a lot of that goes into the data targeting. Should we cut off at top 25% household income, not top 50 or top 75? Where should we be on this and why? And thinking that through and going back to the original strategy and say, was there a flaw? Where was it? And I think it's very brave of you to tell the truth there, Jason. Did we just need a little more time? Did it just needed 4 weeks, not 2 weeks? And, we have to hold hands with the client and say, we all believe in this process and we need to let it play out. I always say to prospective clients, the number one reason a large Reg A plus offering will fail is that it's underfunded. And if it takes extra money to get it going and you're still going to have the same ROI in the end, all it took was a little bit more faith and a little bit more money to get that done. So there you go.
And no one wants to be in that situation of, particularly after the fact, knowing, hey, if I would have stuck with it a little longer, a little bit more time, that situation where I said, 3 weeks wasn't working, 6 weeks it was, if they would have canceled week 4, we of course would have transitioned that appropriately, working on behalf of a brand. But they would have lost the expenses that they put in. They would have not then had that channel to scale up once it was working, and they were very successful thereafter. So really being able to paint that picture. And I think the reason we try to be so process oriented is I'll get on calls at times and perhaps a founder thinks, hey, it's not working. The agency's not working hard enough. Where we want to show them there's nothing behind the curtain. I don't have a room of 50 investors back there and I'm saying, okay, here's the button you click, like here's what we can do. And part of that is bringing historical equity crowdfunding investors to these deals every time. Here's what we can, but here are steps towards it to where we can increase it and try to create that place of collaboration. But I'm with you. I mean, there's nothing you've said that I've disagreed with in any which way. I think it's what you were mentioning of different styles, different approaches. I actually am very envious of how you guys select which deals to participate in and working on fewer deals and having them be, more impactful. So I think it's just different approaches that we're all talking about here.
Yeah, I just want to throw in the best question any prospective has ever asked me, prospective issuers ever asked me, said, name your favorite deal you ever worked on. And it was a real estate deal and it was several $100 million. And they said, and I actually, because we don't mention client names, we don't show samples of our work in general. People know who we are, and that usually is enough. Anyway, we do give references at the 1 yard line if it's really necessary. But anyway, they said, oh, we know that deal. I was like, great. So you know that it's sold, the time period it's sold in, blah, blah, blah. They're like, yeah, but I have one question for you. Was it the right offering to the right audience at the right time? or was it your work that made all the difference? And the answer is, I'll never know the answer to that question.
Yes.
But what I can say is that, and I think all of us can say this, we will do everything in our power to increase the probability of success by tweaking each of these different things that we've been talking about. We may say them all differently, but it's data, meaning audience, it's medium, where we're going to put it, or channel, I think you said, and then the messaging. And the messaging is so multifaceted. We do so much content marketing, yet I never said content marketing, but you did several times. And, it's just another tool in the toolbox. And it's, I think, really important with real estate, less important in other types of offerings. So there you go.
Absolutely. All comes down to that messaging. And I like your answer there. Groups will ask us, and I tell them anything before the analytics come through is just assumption. I would have been wrong many times on which campaigns were the top performers, which performed marginally. Jose, we're coming up on a couple minutes here. Any final thoughts, any final notes that you want to add? Anything we didn't get to that you want to emphasize?
No, I think we talked about pretty much everything. Like, Andrew said, everybody has different approaches. There's multiple approaches to everything, multiple strategies, multiple optimization ways, and they're all successful, right? It just knows if can the agency or the person you're working with do it correctly. And I mean, obviously us three can. We've all crushed it. So, more than anything, I think it's been a pleasure talking to both of you and learning how you guys do it.
Likewise, been an honor being on a panel with you guys. Oscar, we've had a great discussion here talking about strategy, talking about the role of investor acquisition.
You sure? Because that's not what I heard. Yeah. I heard you guys were going at it. I heard one was saying throwing bananas. The other one saying that's not a banana, it's an apple. I mean, sometimes you guys just have to, but the important thing is people got to hear from those who are doing these particular outreaches. And more importantly, the only last bit that I will add to everything you guys have said, what might have worked a month ago or 3 months ago is not necessarily going to be working today. Yeah. And more importantly, democratization does not mean you exclude other types of investors. This is something really important that everyone needs to understand. I hear this often. I didn't hear from you guys, of course, but it's important to understand that democratization meant that everyone would get an opportunity to participate, which means that you still target the existing base that you normally would go to and include them and bring them all together. And this is part of that outreach that these three gentlemen and their firms help you with. So Jason, thank you again. Jose, gracias. And Andrew, have a great time in Denmark.
Thank you.
Looking forward. Have a safe flight back home, all right?
Thank you
Bye,
very
everybody.
much.
Thank you, gentlemen.
All right. So, today you got a glimpse of listening to people about what it takes to put everything together from the lawyers. You heard the preparation stage. We talked about all the different things you need to get together. We kind of give you a sneak peek into the IRA world. What is that going to look like? Whoa, look at this handsome fellow. I love the bow tie. That was a nice bow tie there. I'm sorry, it came at me. So and then listening to the investor acquisition, you put all that together. We've added this now part of our core summits to kind of give people kind of an overview. What we're live now. Now you put all that together. What happens now? People often think that all the preparation is all the stuff you got to do. It's not. And we have brought a group together here. So these are the participants that are working alongside the investor acquisition. They're bringing all that traffic flow, right? Well, someone's got to direct the traffic. That traffic has got to flow somewhere. That traffic need to be viewed by someone, approved. So eventually the capital can end up in your company's bank account so you can start utilizing it to grow your business. So this part of the Core Summit is to discuss your live. And we have brought in 3 different perspectives for you to review today, from the broker dealer, which is what is compliance doing, from the transfer agent, what all transfer agents are doing, of course, and compliance officers, And that's going to be led off today by Julian. So Julian, the floor is yours. And you should have seen his bow tie. It was, I mean, it's a big one.
Awesome. Well, the bow ties are optional, thank goodness, right? Yeah. So Jim, I mean, I was thinking, about what this session was all about today, and really just kind of having us dialogued and being able to discuss all about this. I mean, from your perspective, what are some of the things that you find are key to getting started with this?
Sure. First, I'll get started since I got a bit of an ego here, and I did tie that bow tie myself. Thank you. Jim Caboy, compliance at Rialto Markets. What was your question? What are some of the things that get started?
Getting started, yeah.
Right. So one of the first things we do is AML and identity. We want to know who they are, and everything's happening over the internet. This isn't the typical brokerage or traditional transaction where you're walking into a brokerage, providing your license, shaking a hand, and we get to know who you are. So we need to take a few extra steps, and we use the vendors and the technology so that we can do this. And in doing that, we also speed this up greatly. While there are some pitfalls and things take time dealing with retail and the information we get, and we need to work to fix it, which is things that we step in and help with. We start off right off the bat with, let's find out who you are, make sure you're suitable, and to appease the regulators and do the right thing, that you're not a terrorist and, providing money that we don't want and intertwined into our accounts or investments. One thing I do like about the way we work with KCX and the technology that we use is we do this review first before we take anyone's money. It's just as a wet blanket compliance guy who also deals with operations. If something goes wrong, I don't want to have to give your money back or go through the refund process and delay someone more. So, there's a little thing and a highlight that I like to bring up. It's that we make sure you pass all the reviews. And once we know who you are and things are in order, then we'll go and take the funds. And at times, investors, they're quite confused about this. When they hit an investment button, sometimes, no matter what email or information they do get, people are people. I admit I don't read everything I should every time. Most times that Apple update agreement comes, I click on that right away. So details get missed, and this is new for a lot of folks, not just this ecosystem and people that are here on this call and conference, but for these investors. Some are on Reddit and read about all these things and figure them out. And, we get calls and speak to those guys too, and they're great questions, but some just don't understand. So they assume the minute they hit that button that I now own shares because I was able to, transfer some money through PayPal to my buddy for, the Thursday night football pool that fast. And they use credit cards or they're using ACH. So the money's gone, it must work. So, once I think I'm going way down the process here.
Oh, this is great. Yeah, I was going to
say keep going, right?
I was going to say, Jim, yeah, you brought up a great point about the fact that process is the way it is because it actually can end up saving time later from having to refund and, send the money back. As you mentioned, you're doing the compliance up front, which is also the work that the broker dealer is being paid to do, right? So that's an important role, alleviating a lot of the stress and pressures from the issuer themselves. And that's a key, point, because not all, I guess, broker dealers and perhaps not all, folks in the industry are doing it in that sequence. We've got an integrated process with, Rialto as well that really facilitates that. And I would say that, this goes back to, past, payment rail providers that, you look at the credit card industry where they actually, had pumped the brakes, for lack of better terms, on certain approvals in this space because of the fact that these compliance measures weren't being met early on. And, imagine refunding 1,000 investors, 10,000 investors. We don't want that. And we're moving the industry forward in such a way where compliance is driven with the utmost, integrity and respect to those regulations. So yeah, Jason, what do you think about, some of the key issues on the transfer agent side as it relates to compliance?
Let me just bully in Jason one quick, even though you've got a bigger beard than me, I'm going to just real quick, because I want to jump on that. Not only is it just a pain to refund all those monies, but what if one of those investors happened to be a terrorist?
Yes.
What if he was on the list and we couldn't clear him and he was for $25,000? If he was for $200, we're now filling out SARS reports and we are now opening things up and peeling back layers of onions. And it's great that we would be able to catch somebody or at least fill out the report, but I'm here to help the issuer raise money, keep things right. Of course, my job is to seek out or, sniff out terrorists and bad guys. But if we can avoid all that, not touch their money and know that up front, we can get back to doing what we need to do, closing the applications and things that are coming in. Sorry, Jason.
Yeah, not a problem, James. And just so everybody knows, I'm Jason Futko, co-founder of KoreConnex. I'm here to give you some perspective on the transfer side. I will start by agreeing with everything Jim just said, and it's key for the process that we do it properly, we do it correctly, and everybody, from a compliance perspective, does their share. And James from Realty, they take on a lion's share of that. As the broker dealer or any broker dealer in this situation, they have to do all of that AML, all that KYC. They have to validate those investors, and of course, there's many ways of doing that with, the modern technology that we have, and it's great that they can do it and get that down to the process. From a transfer perspective, there's several key things you're going to want to consider. First is when you're reaching out to do your Reg A and prepping and getting ready to do that, it's best to hire your transfer agent, get them engaged, find out what services they offer, make sure that you're going to get everything you need. From there, make sure you give them your historical cap table, get all of that information loaded into the system. Nothing worse, and I'm sure James will echo this too, when somebody makes an investment in their Reg A and they've already invested in the company previously and they're wondering where their previous investments have been. So it's key to get that information up into the system so that, as I said, as the Reg A starts happening and those investors come back for their second investment round, they can look and see both of their investments in the same place, as opposed to wondering what happened to their first investment and thinking there's an issue and running that up the ladder. So, getting that updated is first. Of course, getting all the documentation onboarding that goes out saying you're going to need to go through that process with the TA that you're using. They'll have a list of documents they require, and they'll have the forms that they need to get through. And of course, once they're done all of that, if you're doing a live offering on a technology platform such as Realty, you're going to need to have your current offering outlined to the transfer agent as well, and to the technology provider and to the broker dealer, so that everybody knows what the offering is, all of the details. Is it a preferred share? Is it a common share? Is it a promissory note? Whatever the offering is, it's important to get that information across so that everybody's on the same page, and to make sure that the technology is actually pushing the right investment through the platform. If you, if you did a common share on your historical cap table, but you failed to tell anybody in the room here or in your team that you're doing a preferred share offering, they may just start ticking along and doing common share offering. Obviously, they're not going to, because they're going to do their due diligence. But if it were to slip through, they could just load up some more common shares. So it's important to get that information, make sure you got the pricing, make sure everybody's on the same page when it comes to the existing offering.
Absolutely.
And of course, Big Mouth has something to add to that and jump on, because Jason, I think, not that you missed it, but communication to your previous shareholders, the fact that the transfer agent has this ability, some of these times, these issuers, they did previous offerings. They weren't happy with the other ones. They don't want to go back. Let's give Realty a shot. We get in there and, we're handling this current offering, but we have zero insight to anything that went on before. And, those guys might get a marketing email and wake up and realize, I did spend $5,000 a couple months or a year ago. I don't even remember what happened. And they're going to come to me right away. And unfortunately, I can't help them. So if you get your records and the issuers get records to the transfer agent ahead, all this can be thought out, and an email is such that, hi, all of your shares will soon be available. We're working on it, and be specific. We expect it to be in 3 days. It could take 5 if there's a hiccup, things like that. The communication to those shareholders is so great. I've learned from these last few where this scenario has happened, because those older shareholders are now awoke. And if they see something different, like a new price that went up, whatever, maybe the interest is still there. And of course, you're retargeting the investors you have. So keep them happy, have them understand the process from the last one, maybe even outline that. And by giving that information to the transfer agent, they have all the emails, they have that information. And of course, the message should come from, the issuer. But the point is, the transfer agent can say, yes, piggyback on that. Here's how you log in, and how you see these shares. And this looks good. This shows that you're professional. This shows that you're involved, that you're good. Some of the questions we get sometimes are, is this company good? Because I don't know who they chose 2 brokers ago. And you have to calm them all down and explain, look, everything's going to be all right. And the company is making the action. They're working with the transfer agent. Things are in the right motion, and you will get there. It's just, as technologically sound as things are these days, some things still take days and weeks. And when you're talking about tons of data, you want to do it right, especially when they're shareholder records. So I think the ability to just piggyback the transfer agent and the broker dealer, we may not be the first ones that you're thinking of when you start a Reg A. You should start with your lawyers and even marketing, and think about things. And we're later on to be brought into the process, but the TA with that communication ability, to me, is something that's big, because I can only communicate to who came to me and what I know about. And I don't want to leave an issuer in the lurch when some of these investors are previous investors, and I'm talking to them because they're current. Some just woke up and, no, I don't want to buy it at this price because I got it at that price. You go, okay, but you want to help them and get them through anyway, because, everything begets more. So,
and you've got time to do that. I mean, when you're doing your filing with the SEC, you have to select your transfer agent at that point anyways. So it's a good idea to get your transfer agent engaged, start your communication, because as you said, communication is key. Let your existing holders know, that you're going to be using this transfer agent. They're going to be invited to come and view their existing holdings. And that way, when it comes to the Reg A process, you can also communicate in advance of that, saying, hey, we're doing a Reg A as well. Come and check it out. Have any questions, reach out. That way, you're kind of layering your communication and starting from, yes, let's get everybody on board. Let's let them know what we're doing. Let's let them know we're doing a Reg A plus. When they get to the Reg A plus, then it's a communication around timing, right? Because it's also key. As you're aware, James, you're not decisioning on the spot. You're not, as they click that button, as they're used to doing with sending their EFT to, their football pool, as you said, there's the time process, right? They have to go through the process. They have to go through AML, KYC. They have to make sure the money gets pulled and cleared. And that process takes time. So, they have to understand that there's going to be a delay between pressing that invest button and getting their shares on the transfer agent's platform, showing as cleared and closed by the broker dealer.
And just what you're saying is, they have to know it. This is all still new. Like I said before, yeah. People don't all realize the process. Issuers come to us and they don't. Can I get my money tomorrow? And you're like, well, we're going to have to raise 75 million before we give it to you. But it's a real question, and it makes sense because they just don't. So imagine someone's grandma, grandpa who bought these shares, and just really, I have to put a social security number in on. Why would I do that? And I answer that question. I explain, this is a security. This isn't a lotto ticket. We need to know who you are and clear who you are, and they get it. And I think the more, even as an issuer, that you can explain and put to this process to these folks that are going to give you that money, it really, because no one's really reading that offering circular with all the terms. You want to hit the notes, and I get it, but they need to know the process. They don't, while I might be able to close one application in 3 days if the money comes out and clears and all the things come through AML and identity in seconds, great. But most of the time, or most, maybe not, there's people put X's in for their social. They'll put it off a digit. If they're doing it on their phone, their email might be off by a one letter, or, Gmail is something I see quite a lot. So these things are what cause the delay or a little extra time. And, we try to bake that up in the beginning when there's a confirmation email that, hey, as soon as you hit invest, there's an email that says your application's in. Now be patient. This could take 14 to 30 days. Even if that's the second line on an email, some people don't see that and they don't understand, and it's fine. They could, or allowed, that email also gives a contact information so they can come to me in my firm and we can explain that process and educate them. But, I all this from what, I think educating or just highlighting timelines and letting that investor know the status around everything all times is what they're always checking in on. And I think the more you can do that, and even if you can as the issuer, because you're trying to do what you do, that's why the rest of the, the folks here in the ecosystem, they handle those parts and to keep making you more money and make you a bigger, get you to that IPO stage. Because that's the other question they all ask.
There you go. Well, Jason, a couple quick points too from your end. Now, this is relating to obviously compliance and, in terms of a timeline. How much time lead time do issuers need in terms of getting that cap table information or trying to retrieve? Are there concrete steps that they can do to get that information? And then I'll wanted to ask a little bit more to the panel as well as it relates to real estate and compliance. Are there any type of structures that are being used today by particularly real estate funds that we're seeing more of, maybe something that relates to the marketplace?
Yeah, I mean, for sure. The process for us is, as I mentioned earlier, it's fairly simplistic. When you're going with a TA or us or any other TA, you go through the onboarding. That onboarding, like I said, we'll send out an email. There'll be a list of things we need to get from you in order to move forward for compliance. They're fairly simple. The biggest obviously being the cap table report. We give a specific format that we'd like to see it in, CSV template, keeps it fairly straightforward. We don't usually have too much trouble onboarding when it comes to getting the data in the right format. Sometimes you get, the issuers have done 4 or 5 different fundraisers in the past from different brokers, different TAs, and they don't necessarily have it all cohesive. So it's bits and pieces. That takes a little longer. So if you're finding yourself with lots of information to upload, give yourself a little extra time to get it in the system. I mean, from the uploading standpoint, it doesn't take long on our end to get things loaded. Once we have them in the right format, we have the right information, we have those compliance documents that we can tick off.
Yeah, so it's not unusual to have like a month, 2 months, to have that lead up, right?
Yeah, for sure. I mean, you're going to have that time anyways between the time you select your TAs, file your submission with the SEC. You're going to have 30 plus days. There's people I know that are still waiting 6 to 9 months to get things back and forth because they've had so many questions with the SEC. Or there's the ones that are quick and they happen in 60 days. But you're still going to have that time to get things done. Just don't slack off and think, let's leave it to the end. Let's get it done at the beginning so that when, Jim's turn is up and it's live on the site, you don't have all these questions coming up disrupting the process because you really just want that to run smoothly.
Yeah, for sure. Now, a lot of fundraisers are happening on the issuer's site versus sometimes going to, a licensed funding portal. And I think that for real estate, a lot of times we're seeing that the issuer is actually wanting to have it live and breathe on their website for Reg CF, Reg A raises. Now, This is, of course, by choice for the issuer, but when we're seeing it on site, sometimes that's purposefully done, especially some certain types of structures, legal structures, where cost of capital is also in the back of the mind in terms of the folks that are setting up these real estate funds and how the profitability is built into their sheets. We're seeing some companies sometimes that are setting up SPA loans with, the government, where they can't actually have, 7 or 8% of the capital go to certain platforms. They rather have it on, a controlled, self-hosted through their website, where broker dealer, Realtor and such have a much better, cost structure that helps. So in that sense, I mean, we're seeing some of these structures happen more frequently, aren't we, James? And maybe we could speak to a little bit of that as it relates to getting compliant and get things up and running.
Yeah, and as far as the finance and who owns what percent, and I'm going to say I'm as the broker dealer, when you come to me and ask me all these little nitty, I'm going to say, what did your lawyer say? Because we're not going to provide the legal advice, but I have an idea. And if you ask a question, I pretty much know is that something you're going to want legal advice, and check with your lawyer on how you're setting that up. But when it comes to, the Reg A's, we'll start there. You're, to use your own site and to put our technology on there so we can get all that. That to me is you're putting everything in one spot for everyone to look. There's no confusion. We're avoiding any regulatory issues where if you're mixing it on your normal site, that everything on that site might be considered part of the offering circular just because the wind blew the right day that the SEC happened to go to your website. So, structure wise, as far as that, Reg A, don't put anything on your own website, create one for this purpose, or lead there from your website. So it's got to be a direct link. There are a few little things you can always check in on there, but another thing I've been seeing, and speaking of these sites, is if it's a direct participation type deal, which I think some of these funds and real estate deals tend to be, there needs to be a little lead time, because once the broker dealer is involved, now FINRA wants to make sure that anything that's advertised where the broker dealer is involved, meaning our logo or powered by Rialto, something along those lines, so that they, investors realize that there's a broker dealer involved and this is a real deal. FINRA wants to review all of that material to make sure that it meets their standards, meaning you're not saying this thing's guaranteed to scream, it's screaming to the moon, and of course we don't try not to put those things in there or say SEC or FINRA approved, because they approve nothing. So there is a little lead time that we'll need to get those materials, anything that a broker dealer is on, so that we can get those in front of FINRA, which of course they charge a little fee for that. So, but we're talking $125 or, maybe $600 if you need to get it done in a day or two. Usually we take PDFs and kick them over there and they give them a review, and their comments are usually, you're pressuring folks here with this time, we have to act now, things like that. That scares them. So they don't want that stuff in there. Of course, you can do that in a car commercial or anywhere else, but not for security. And that's just the way it is. It's not changing. So I just wanted to bake that in there as far as timing we spoke about, and that will need to be reviewed. So when you have materials and things too, and you're working with a broker dealer like Rialto, we like to see your marketing material. I might not have anything to do with me, but put it in front of me. Maybe I have 20 minutes to give it a review and go, you definitely don't want to say this, or this is what the regulators might think, because in the end, that's the last one you want knocking on your door if they don't think you're doing it right. So, because it'll slow you down, you'll have to explain. And if anything gets out along those lines, investors don't want it. What? SEC asked them a question. So you want to avoid the things like that at all costs.
Well, that makes sense, Jay. Yeah, thanks for that.
The DPP and just this is, and I just usually see it with real estate. That is that little thing we need to get it over to FINRA for a review in their ad reg department.
Great point about the content and the campaign compliance aspect as well.
And since that website is public and anyone can go to it, that's considered advertising. Even if I didn't send that link to someone, if Julian's little sister just happened to stumble on that website and wanted to buy something, it's considered advertising, solicitation. So it is what it is. That's how they see it. So we got to get in line.
Like a billboard, as I was told. There you go. Excellent. Well, we're wrapping up to time. I think we got about 3 minutes left, but generally maybe some closing thoughts about compliance, and maybe you'll start with you, Jason. Any nuggets of wisdom we want to leave behind for the crowd here?
Yeah, I mean, I'm just gonna keep driving home the same point. Get yourself organized, get the information done early, come prepared. You don't want to drag this process on any more than you have to. It can get unwieldy if you're not prepared, and you make people go through hoops more than once. If James got to review the same thing 3 different times because it was edited 3 different times, it's wasting time. If your lawyer has to do it, it's wasting time and money. So you just make sure you're prepared. Communicate the process, not just to your internal team, to your professionals that you're using in the ecosystem. Make sure that your shareholders are aware when they're moving to a transfer agent. They're aware, that they'll be contacted and that they'll be able to find that information, and keep them involved in that process. They may come back. Who knows? It's not the first time that a previous investor invests in your current round. So keeping them apprised, letting them know you're doing another round of financing, and preparing them for the timelines and everything else. That communication being key, and just like I said, stick to it.
Exactly. Yeah. And I would add to that is just like a lot of times is if that process is unfamiliar, or perhaps if it's not a comfortable role for, people in your organization, sometimes looking outwards and bringing somebody in to handle that process might really be worth the spend as well, just so that you've got someone dedicated to it. We've seen that on our end as well. It can be pieced together, but with a lot of effort, or perhaps someone can drive that forward on your organization's behalf. Jim, a few final closing words, and we'll bring Oscar back in the fold.
Yeah, I'll just jump on with, because I'm the wet blanket compliance guy. Compliance is everybody's job in this entire process. And I've been saying that line for years. It's what kept me from getting beat up on trading floors, but it's everyone's job, but not everybody focuses on it. So sometimes you need to plug in those that's their focus. And that's, we're a broker dealer. Our hands are in the drawer on this one. And I studied all day to say drawer and not draw, being from Jersey here, but so it's important sometimes to plug the right folks in. If you have a shareholder list that's 3,000, 5,000 shareholders from 6 different offerings, is someone in your firm that, while you're trying to make widgets, do you have the right person who can keep all that in the spot and actually communicate and do the things that need to be, sometimes you just have to get the right person and put in that spot to be able to do things. So
excellent. Well, thank you, everybody. I'm going to turn this over. We've heard the compliance side. Hopefully that added value to everyone. And thank you very much for your time. Over to you, Oscar. Welcome back. All right.
All right, I'll tie a bow tie while we wait.
Yeah, exactly. Sometimes we need the intermission. I think
we need a lesson on how to do a bow tie.
That's right. We don't have the Super Bowl budget yet, so we don't have a halftime. Excellent. And well, Dr. Karan Merrill is on, so let's see. He's ready to roll. There we go, Oscar.
Okay, everyone. All right. It looks like he is there. There's Dr. Karan. We're looking for Joel. He should be making his way back. But Jim, you stay on there just for a little bit, because you are you're a nice guy. Everybody likes you. So Karan and
haven't heard
Joel,
that today.
and yes, I love your bow tie, by the way. Thank you for that. I love the color. So we're obviously down to the wire talking about secondary market, and secondary market is the last stage after the company's live. They can sell their securities. So Jim plays that role there. I mean, not only is he involved in the primary side, but it's just as important on the secondary, having a great discussion with Karan. So the floor is yours, Karan. Be nice to him.
Right.
He wore a beautiful green bow tie today.
Well, that is awesome. Is it St. Patrick's or something? Awesome. Hey, welcome, Jim. Love to have a conversation with you always. You've been a great partner and, educator in this space. I mean, really educating people on what it takes to do the primary and, moving on to the secondary. So really appreciate that. And Jim, one thing really strikes me, and, hopefully you can, put some color on this one. I think the whole approach to secondary market has been, let's build the market and, let's start doing a lot of trading on that with all kinds of, coins and tokens and stuff like that. And I think over the last couple of years, if anything else, we have come to realize that it's not as straightforward or easy as it is, because there's a whole front-end component to that one that makes it important for people to understand there's a compliance aspect to all of this, right? I mean, we need to know how the trading actually works. And you have been in the thick of this in, so many different deals out there, and you're living and breathing this. Can you shed some light on the importance of the compliance aspect? I would love to hear from you.
Sure. So I will, I'll agree that when this first started out, you and I had some conversations for hours about what the token and how do we, and in the end, and I'll act like or sound like an SEC lawyer at a conference right now. This is my own view. This is not the view of anyone in my firm or I don't even know. But to me, tokens right now and trading in these markets, it's not important. And it was a big deal, and digital and the back end and how records are kept and the distributed ledger technology is great. Blockchain is great. But when it comes to the securities market, and we could settle things in a day if we needed to. We don't need a token. And the way I understand it from Mr. Gensler, it's not going to happen if that anyone's going to just sling a token from my wallet to your wallet. And there we go. The Apple shares that I had are now yours, let alone unregistered private shares that we don't, only a transfer agent or an issuer may have the cap table for in the first place. So, I when it comes to compliance, and in speaking with the ecosystem, and as we've been building the ATS and setting things up, there are some that are very traditional that just, they still want to use medallion stamps and paper and think it takes 2 weeks if you don't use a token. And that's where you have to go, hold on, everybody, there's a middle ground. We can meet what we're doing by using blockchain, just not this token and when I say token, it's the thing that would sit in your MetaMask wallet or anything. Yeah, I've also learned in working with Doc over the last few years, tokens mean a whole bunch of things in technology world, but
and that's right.
Yeah,
I mean, it's what's amazing about this whole market, and this has been it's been a learning for us, and like many people in our space, and we have been at the forefront of this one too, and. It seems to me that a lot of people really don't understand when it comes to secondary trading of any type in this space. The instruments that they hold for trading are not really bearer instruments. You just can't put it in the wallet and airdrop it to somebody else, right? And it becomes theirs just because it got airdropped to somebody else, right? It's not like a currency note. These are non-bearer instruments that need to be validated independently and separately. Otherwise, ownership just doesn't pass that way, right?
Right. I can't put my private placements on a thumb drive and then leave them on a bus and go, oh, I lost $75 million just like that. That story's not going to happen. One, I don't even want to be on a bus, and I haven't seen a thumb drive in years anyway. So, but like you're saying, people think that can happen. And I think what happens here is, let's be honest, Reg CF, the type of crowd, the smaller investor, the crowd, the public that you're looking for, they kind of, there might have been a overlap with those folks that, well, I love the whole crypto thing. I'm away from the government and blah, 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 blah. And not that all crypto's, away from the government, whatever. I don't want to, but that kind of, those folks got excited about the crypto and they saw that. And people when this first started, we said, those shares, that's how this is going to act. Let's just move this whole thing, fast forward at that into that kind of digital world. And in the end, the SEC just didn't agree, and it didn't need to happen. And so I think in the beginning it was driven by that kind of, those that followed the crypto and the blockchain and saw that. And in the end, we just don't need that portion of it. We just, the records on distributed ledger, that's great to be able to move things around and understand and keep tokens on folks and know who they are and white label things, all important. And it's just that one little sliver for me of actually leaving a wallet and going to someone else's as if it was a bearer instrument. It's just never going to happen. So
I know. And you've been in the thick of so many conversations with clients and investors yourself, and so have I. And we've been together on many of those, right?
And they ask, can I keep this in my wallet? And issuers want to know too. And some come to us and they say, I'm looking to digitize this right away.
Yes.
You spend your money how you want to spend your money. Yep. But so as the broker dealer that's doing one, the primary, and doing two, the secondary, we're agnostic to whatever chain you put it on, whatever, because at the end of the day, I just need to know that Joe Schmo owns 7 shares and that they're unencumbered and that he'd like to sell them. Hopefully it's 7 million shares he's liking to sell. I don't know.
Yeah, that's right. That's
not
right.
for the issue, but
yeah, no, that's right. That's right. And the other important aspect of this is the safety, security, and protection of the investor, right? So in other words, people ask, right, where are my securities? What happens if I lose them? Is there a recourse to this, right? And, some of them, and not a whole lot of them, right? a lot of our investors, that we talk to, and a lot of our partners talk to, are really people who have real money and they want like real protections. They're not out there to overthrow the government and do, some really weird stuff. I can understand the angst behind that. I get that. But, these are the people that say, no, if I lose my thumb drive, I don't want to lose all my, holdings, right? I can trust on you guys, right? Yep, we can trust that. And it's there.
I've got calls today, and they tend to be a little, some of them, the younger ones or the ones that don't care whether they're getting a certificate, we don't really hear for them. They just wonder why money was out of my bank or didn't come out of my bank yet. I just hit the button. Why don't I own them? But there are people that say, am I getting a certificate for these? And we say, well, we don't print them up and mail them. That's an additional cost. And I say, and the certificate, and then I'll go in to explain, if you gave that certificate to me and I paid you $100 for it, in 3 years, I can't go collect dividends. I can't sell that stock because the SEC in the world all still knows the transfer agent that was hired to record all these shares, that's who owns it. And if I try to go and prove that, Karan sold it to me, nobody's going to care. Even if I showed a receipt and a video of us exchanging it, nobody cares because on that transfer agent record, that's what counts. And so I explained that to a gentleman today who's logging into your system. We're in the process we've got 2 of his applications done. We're waiting on a 3rd. And he just wanted to make sure that 3rd was coming. And I said, yes, it is. And then he wanted certificates. I said, please print them, download them, put them on your fridge if you'd like to, but know that that's just something you might want to keep with a receipt in case, there's some catastrophe and you need a record of something. But those are there. Those are logged on. They're on a blockchain. It's immutable. The records are there. And if something changes, like such as a transfer or that is allowable, which needs to be allowable, then it'll be recorded and still. And it was an education process. He understood it at that point. And I think he even went, this is a little more exciting than waiting 2 weeks, signing 4 papers like I'm closing on a house or a mortgage and writing a check kind of deal. So yeah,
it's those protections are so important. We know, how much angst, our investors, people have about, all of this stuff. And, the funny part about all this is that, a lot of the crypto space as a payment instrument has sort of colored people's views on how trading actually happens. And as we all know now, not just us, but everybody now knows how many scams have happened in the whole ICO space. And funnily enough, the people who invested in that were people who had a bone to pick with the traditional regulatory agencies and the governments, right? At the same time, when they got scammed and they lost all that money, guess what they did?
They went to the government and
It went
complained.
back to the
Why
government.
didn't you
Help!
protect me?
Exactly. Why didn't you protect me, right? So I think they were really good lessons learned. But what are your thoughts on where we are with the fluidity? I mean, that's a word that I love. And one of your colleagues started using that, and I said, that's fantastic, right? So the big issue wasn't so much about regulators and the fact that there are all this SEC and FINRA broken, all these things happening. It's more about, is it a bureaucratic nightmare, or can we make these transactions more fluid, right? And we all have been working very hard to ensure this type of fluidity. I don't know if you had any thoughts specifically, around the value of making these very transparent, very fluid.
It has to be. Already people put their order up and at Robinhood and don't understand why they can't get an execution. And then obviously that's a different market where there is a live person on the other side. You see a live market, but why didn't it go? Or, and at times maybe some market may go take your stock. But, if in the way that we're going to put matches together and the way that we will provide information to custodians so that matches can be settled and actually take that next step. That was a big problem in the beginning, the way that the SEC was allowing us to act. We knew there'd be fails and things would fall down. And right there, you don't want to start building an industry. You don't want to start building a section of the industry that is rife for issues, because you might as well just launch, all these ICOs that are going to go belly up, and no one's going to do that anymore. Why would they want? So we worked with them. Linda Lerner was definitely helped get us to a spot that said, all right, we'll do this. And these checks, we'll add checks and we'll make sure. And it brings the investor, especially in our ATS, the investors, a subscriber themselves. They're putting the order in. They don't going to a broker dealer. They join themselves. They come on, they see what's there. And there's, let's be honest, the word liquidity might get mixed up with liquidity here and there. It's about an opportunity to move, to transact in this stock, whether it's to sell it or to buy the next one. It's not always, it's an opportunity. Things won't always be so liquid where right away you might find something, but you'll see the market. You'll see the last transaction. It might have been a month ago. So, something will tell you it's been a month ago, but you'll see how you can put your order, and it's as if you're a broker who's up in a NASDAQ terminal and putting the information in. So subscribers get to put their own orders in and make their own decisions. So I think that bit of transparency as well, helps them understand more about this private placement market.
He has amazed me. You always have. You and I are going to be celebrating. How many years I've known you?
I didn't have hair back then either, if that's what you're talking about.
No, I didn't say that. No, it's it's refreshing to hear someone from a compliance perspective giving a great overview. And I know, Joel, I do apologize for these new securities with Zoom now. I think we're going to need to let everybody know, once you leave, you can't come back. The Zoom,
I apologize.
Yeah, which is really odd, but thank you, Joel, for making it. Joel is one of the co-founders and COO of Realty Markets. And I've asked him, Karan, to join the conversation with you and Mr. Kaboy, Sir Kaboy, my apologies, Sir Kaboy. Yes, he's asked me to call him Sir. And the discussion of secondary market. And I'm going to leave you guys with this, because one thing about real estate, let's talk about hype, where all the hype has been in secondary market, is fractionalization. So I'm going to leave you with that subject, and because that's, whenever you hear about real estate, the next item is, oh, you can fractionalize. You always could, but so obviously, this is going to be an interesting discussion because this is now the new frontier. Can it be done? Can secondary markets support that? And how will it support it? And the mechanism, and of course, with the compliance side of it. I leave you three to juggle that one there.
Awesome. Thank you, Oscar. Hey, Joel, welcome.
Thank you.
Nice seeing you again.
Nice seeing
And,
you.
As Jim and I, we were even having this conversation, we were all saying, how many times we have had deep conversations around the secondary markets and making all these things very fluid, right? And, I come from the large company space. I used to be a global CIO for GE and on the financial side. And we have dealt with the markets. I've been a trader myself on public markets. And several years ago, when I met Oscar, and Oscar was telling me, how long it takes in the private markets to actually effect a trade. And I said, well, in the public markets, it takes me like 5 seconds to do it. And they said, no, it takes 2 to 3 weeks to do it. And I said, really? Right at that minute. And Oscar and we actually met at a conference for the small to medium enterprises, national conference, one of those things. And I was astounded to learn that 50 to 60% of the world's GDP is powered by or facilitated through the non-public, the private side, right? And I said, well, if that is so inefficient on the private side, it's something that we need to really look at and help. That's always been our vision, right? I mean, we always talked about it. So I'd love to kind of get, share with us, your own perspective on that particular aspect, but also specifically, what is it about real estate and fractionalization that makes all this so attractive?
So I'll start here with the first question. There were 2 parts to that. The first question, or the first point of discussion is, what about the private markets is such a large piece? Well, that issue has actually been exacerbated over the last number of years. And the reason for it is 10 years ago, 12 years ago, a private company stayed private for an average of a little more than 4 years, and then they went public. Now that average is about 13 years. So it's more than 3 times as long for a company to actually create what it was called a liquidity event that enabled its investors to monetize their investment. So it's become a lot harder to do so. So it's not just that there's so much wealth out there that is in the private markets, but it's staying in the private markets even longer than it did in the past. So finding some options to monetize your investment and realize the value of what you've done has become that much more important. Now, when you go on to a secondary market in a private security, if it's a small security like a RegA, where it'll be, let's say, 20, 30, $40 million, that's going to be small. It's not going to be liquid like trading Microsoft. But there is an option to actually offer that out on a secondary system that now, in a sense, lets thousands, tens of thousands, possibly hundreds of thousands of users know that there is availability for an investment opportunity. So just having that access to the platform gives you a much greater chance of finding what we call an exit ramp to your investment and realizing the value. And as you said, Grant, it's so much more important now because companies are staying private for so much longer.
That's right. That's right. And is it also the fact that the public companies are going the other way, becoming private?
Yeah. So if you actually look at the numbers, the growth rate of private companies over public companies, not only are there so many more of them, like you said earlier, but the growth rate of them is more than double. So the private companies, and that's not just because so many private companies are now out there, but also because some of the public companies are now sort of potentially retracting, if you will, and becoming private or seeing if they can do it in some manner, shape, or form. And so that problem has become much more acute. The challenge of a lot of these companies, from a corporate perspective, is how do I create an investment that's investable? So if we're going to go out to the marketplace and I have all these private companies and it's the same universe of buyers that all the public companies have, or that most of the investments come from, real institutional type of buyers, then it's not going to be a successful area because now it's just competition competing for the same dollars. What's happened in the private markets through things like Reg A, Reg CF, is we've created a market environment, the regulators have done so, that has opened up the world of private securities to the public, to everyone. Nonetheless, there's still a challenge by those issuers to find a way where they can create a security that is investable. That would mean it's not too complex, not too complicated. People are able to feel comfortable in it, and people are able to invest their money. So if you have someone who has $1,000 they're able to invest, in the past, you could not invest in real estate, right? I live in New York. If you want to buy a bathroom in Manhattan, it's going to cost you $1 million, right? You can't get into real estate with small amounts of money. So the only way you can possibly do that is to create a security that says you will own a portion of that bathroom, right? You'll own a portion of whatever security exists. That's the idea of fractionalization. It's creating a universe that can say any asset can be broken down into small pieces. Real estate is a prime place to do that because these assets are so valuable and they're so high net worth that in order to get into it, you're going to have to fractionalize in order to democratize. That fractionalization capability is more available now through digitization, whether that's digital security or just blockchain-based systems. The world has created the ability to service fractionalize assets because of the digitization of the investment world.
Absolutely. And, a lot of the conversations that I have from a technology perspective is that, it's almost like technology is seen as the, way to hammer a business model. It doesn't quite work like that. The economics of the underlying business need to support that. There has to be real need. And then technology becomes a enabler. It's, building fluidity, right? So that's a lesson that I've learned over the years, looking at this stuff. But there's one thing that you just said that it just made a lot of sense to me, and it's a well-phrased word, and that's investable. So being investable, if some security is investable, it means, at least for now in this discussion, two things, right? Number one, it's subsequently easily tradable. So I can monetize and get out of it rather than being, illiquid for a number of years. That's attractiveness of investability. And especially for the real estate market, the other portion of the, is it investable or not, is can it be fractionalized or not, right? I mean, I think that was a nice aha moment for me, the way you put it right there.
Yeah, so there's this goes back a couple of years. I was talking to one of the top 5 bond funds in the country, very large bond fund, and they get money, and as you can imagine, tens of millions, hundreds of millions of dollars coming in every day that has to be invested, and they were struggling mightily. And the reason they were struggling is there were plenty of assets to invest in, but the cost of getting out of those investments was so high that it wasn't worth the investment. They were so illiquid. Some of these bonds were so illiquid that they factored in what it would cost to get out. And if you're looking to make 7-8%, and you're going to have to sell it at some discount that lowers you to 4 or 5%, you might as well not invest at all. And that's where I think sometimes the secondary markets that we refer to are not just advantageous for the secondary markets. They're advantageous for the initial primary investment. An investor is going to look right at the initial moment when I'm first getting into that investment. They're going to make a determination of, can I sell? Can I realize the profits when the profits come? And that people think of, well, that's a secondary market. And issuers will say, I'll deal with that later. Don't deal with it later, because when you deal with it at the very moment of your primary issuance, you are going to expand the reach of who will invest simply because they realize there are other options of getting out. So, if you go to the institutional community in the standard world of investment, any institution, any VC firm, any family office, any asset manager, any hedge fund is going to ask you, what's your exit strategy? And the exit
Of course.
strategy has always been something like IPO, takeover, someone's going to buy me. Those are the exit strategies. Well, today's world, that exit strategy is going to be in 8, 10, 12 years. Investors very often are saying, I don't want to hold my money up that long. If you can come back and say, I have an exit strategy, it's going to be a fantastic one. But if you want to liquidate your holdings and monetize your investment earlier, we also have this option.
You know, that is such a powerful proposition. I'll tell you why. You know, I've traded the markets myself, right? Not a day trader. I used to be a trend following trader. I had my own system, and I've done commodities and futures and, options and obviously stocks. And, I've had a lot of conversations with seasoned traders. And if there's one advice that kind of stuck out for me is that before you enter, know how you're going to exit, right? If you have no strategy around exit, then you're not really you're not going to be a good investor, so to speak, right? And so that was a big object lesson for me. So one question that I have for you, this is something, and I've started a couple of companies myself, and if I were going to start a company, I've been an entrepreneur, what would you tell me as a CEO looking to do a primary issuance? How should I position this, and what steps should I be taking as a company to position this attractively for investors, and what should I be doing in terms of a secondary market value proposition?
So that's probably got a couple answers to it. I'm going to start off with some of the business ideas, and then there are some regulatory things that you really have to consider, and I'll ask Jim to really focus on those. But from the strategic side of it, you need to understand who your audience is and how you're going to target that audience for the investment. So if you're looking to really go to a RegA security, for example, in real estate, how are you going to get to the retail investors of that RegA security? Do you have a fan base already, people that know who you are and are willing to come in that you can just advertise to right away? Are you going to need a marketing firm that's going to drive knowledge of your company to them so that they now will come to you and look to invest? What is your your investor acquisition strategy? That's a key component to figuring things out. The second thing is, what are the incentives that are going to be delivered to the investors that will say to them, invest in this over something else? And that part of it is, as we've been discussing, part of that is, how am I going to be able to reach my exit ramp? I know my on-ramp. My on-ramp is I come to you and I buy. But what is my exit ramp to be able to realize that? Because if you're saying that you're going to get to a certain point in 10 years, maybe in 3 years, I need to buy a new house and I just need a few extra dollars, and you have my few extra dollars. How am I going to be able to get to those few extra dollars? Is there some way that I can monetize my investment? Delivering incentives like that to the investor community, where they can start feeling very comfortable about what the investment looks like, what its potential is, and how I can realize that potential, are essential elements as you're starting things to go. That's from a strategic level. From a regulatory and legal level, Jim, I don't know if you want to pipe in sort of things they should think of as they're preparing.
So, sure. I get this question from 5 investors a day. Or whether they've already sent the money in and it's closed, or they're about to and they want to know. And one, it's usually educating them that a Reg A is freely tradable. As soon as it's issued, maybe a Reg CF, Reg D, you got to sit on it for a year. Okay, all right. And well, then what happens? And as a compliance guy, I'm a wet blanket, but I need to be fair and balanced. So I go through 5. I say there's 5 things that you can do. First, this could go right down to 0 and you can lose everything. And I get that. I read that on the first page, and that's where they stopped reading. They didn't get to the other parts of the offering circular that might explain that the firm, and this is all legal talk, so of course it's a little bit vague and it's spelled out to protect and it not, but maybe it should be a little more directed if you do have an idea and an exit strategy and you're looking at a goals, so usually the language somewhere in the plan of distribution is, right now there is no secondary market or venue or location for this to trade. And I kind of say I know of a few that are coming up, and the Rialto markets happens to be one. So maybe up in the beginning, you're transparent and you disclose that, yes, while we could go to zero, while we may get bought out, while we may change tactics, and and I don't know, redeem all shares, there's a good chance that our main goals, maybe highlight them, or be able to put them legally without being committed in of what we'd first love to IPO. But two, there is a venue that we can go on that you can put your order on to get out, or maybe someone can get more, So I think in the offering circular, there's a way to address it. And as it's still new. So, that language I'm kind of learning. Some lawyers are telling me it doesn't matter. It's there because that's what the SEC likes to read and see on everyone. So if you're really trying to change it up, it might slow things down and ruin it. And it doesn't say that they can't go and list later on. But my thought is, and on here is, because I get the question, how am I going to get my money back? How am I going to get my money back? And, so I go through the 5 layers of what could happen and provide for that. And, everyone gets it at that point. But
so Jim often tells us, and I think that he just spoke to it as well, disclosure is just so important. If you disclose the things as an issuer, if you disclose what's available, what's going on, and you're just upfront with everything, it's going to benefit you in multiple ways. Number one, as far as the regulators are concerned, they now are fully aware of what you're doing. You've told them what you're doing, and they generally are much more comfortable as long as you've told them what you're going to do. Mm-hmm. And number two, the investors now are fully aware of what is available to them and what might not be available to them. That disclosure is greatly appreciated by all investors, but particularly ones that are putting in more significant amounts of money. Remember, the Reg A securities are not restricted to non-accredited investors. Right? There are plenty of accredited investors that come into Reg A securities. Those kind of investors can put in more amounts of money. And when they do so, they just want to know that they're being told what's happening. And that disclosure, it goes a long way.
Oh, of course. And, there are quite a few people who keep investing. They want to invest, not just in one and two. And, in the same company, they keep investing, multiple times. But there's a parallel that, and I just want to get you a quick read on this one. So in the general public markets, you have the OTC, the pink sheets and, bulletin boards, and then you have the NYSEs and the NASDAQs and the big name things, right? So being listed on some of those things has a pride of place. I think most importantly, it's because of the liquidity and the availability of, the secondary trading and so on, right? And as a corporate person saying, hey, should I be offering this to my shareholders? I'm just thinking, that the valuation of my company and who I am says a lot if I can actually offer that, because I'm coming at it from a position of poise and confidence, and making that available to investors, right? So the value of my company could be seen as higher precisely because of that. Any thoughts around that? I know you guys have been in this markets for much longer than I have.
Yeah. So Jim's waving goodbye. So
I've got to jump, folks. Apologies. Have a great one. And Joel knows a lot more about this than I do.
Oh,
thanks, Jim, for filling. I appreciate it. I'm sorry, Karan, just remind me.
This was about the perceived value of a company that allows its shareholders to be able to trade.
Yes, exactly. So the perceived value, the perception is going to be extremely important. Again, especially when you're dealing with a Reg A security, because the universe of investors is democratized. It's so much wider. You're going to very much a retail investment world. And therefore that perception of value is going to be very important. The perception of value that a company has goes up when they say to their customers, I'm perfectly fine with giving you an exit ramp. It's the ones that lock you in that the value people start to question, well, why are you locking me in? because I'm going to have to wait for 5 years and you're not going to really make money. But the ones that say, listen, you can Reg A security, as soon as you buy it, you can sell it. I'm okay with it. The Reg A security, by definition, should give a good perception of value, because it's saying to the customers, if you want to sell it, I'm okay with it. Because as an owner, I think you'd be a fool to sell the security. It's going to do really well, right? And that's what you're saying. And the same idea saying, I'm giving you a secondary market to trade it. I'm okay with that. I'm comfortable in my own skin to be able to say, you can do what you want with it, because I'm going to find other investors, and you're going to find other investors who are willing to buy this. That's a great perception to deliver. And I'm going to bring it back to specifically this session or this summit. In real estate, so we deal with a lot of companies that are doing this exact thing in the real estate world. And in real estate, the old adage of location, location, location is very true the whole way through. So there are a lot of investment opportunities in a lot of places that some investors have no clue about. Again, I'm from New York. Basically, we feel in New York that in order to even get to New Jersey, you need a passport, right? There's nothing outside of New York, right? So when you start going to the Midwest or, Canada and different places, what's there? And when you can start delivering to these customers a comfort level that says, here's an investment that's worthwhile because I'm comfortable enough in doing this, and I'm comfortable enough in the structure of the security, the ability of giving the investors their dollars, letting them realize their value appropriately, goes a long way, particularly in a marketplace and to an investor base that doesn't fully understand the single most important element of that marketplace.
Well said. Well said.
That's we haven't really spoken about it, and you really tied up an interesting point there, and it is so true that a lot of companies lock up their investors thinking that's the better, and it's sort of like, don't lock them up, give them the opportunity. It is amazing to think how many people really want to exit out of that. I mean, there'll always be a few for whatever reason, financial reason, but at least you're not troubled by it now that there is a regulated environment that they can go to monetize their investment. I've often wondered, was that put in place by lawyers advising, saying, hey, you don't want to be dealing with this? But now that narrative has to change, because we're now saying you don't have to worry about it. It's already there, and it doesn't have to bother you.
That's the key.
So I don't mean to just compliment you guys, but I'm going to here. And here's the key component to it. We get this question a lot from companies that say, well, when normally I raise, and the raise is normally done in some Reg D, and I'm raising X amount of money and I'm getting 10 or 20 investors. I don't really want a cap table that has 2,000 investors. It's just too complex for me. And you know something? 5 years ago, it was. But the technology that exists today, what KoreConnex does, is it basically says it's just as easy for me to manage 5,000 investors as it is to manage 50. And you're right, 5 years ago, 10 years ago, that wasn't doable, but it is now. And if that's the case, complexity of a cap table should be looked at as diversity of a cap table. The complexity is easy, but imagine how the benefits of having a diverse cap table.
Actually, that's a very good point to make, because you're right. I mean, as entrepreneurs, we are led down a path thinking that we have to make it small, and for the fear, and the fear was created all of the numbers. And yet, when a company says, I have 5,000 customers, everybody's around applauding them, saying, look at you, congratulations. How are you doing that? Well, you were smart enough to get a CRM tool and a sales tool, and very same thing here, right?
I have to say this one. Oscar, this book, you remember the book you wrote, where you had a whole chapter on The shareholders can be your advocates, your ambassadors. Right? They're not just simply there with the money. They're out there helping the companies, spread the word and be the ambassadors. And if that is really sort of the vision that people, companies need to have, the diversity of cap table, as you so rightly pointed out, Joel, I mean, that is vital for this environment.
And each one leverages off the other.
Exactly.
That cap table that is now not only your marketing tool, right? Especially in the retail market, Oscar, I've heard you say this in the past too. Those are the people that are going onto social media and saying, hey, I got involved in such and such. The investor at Fidelity is not doing that. And when I say Fidelity, I mean Fidelity themselves, Wellington. They're not doing that. But the retail investor is going and doing that brand for you. The second thing is, if you're a type of company that also is looking at customers potentially, so let's say you're a real estate company and you have malls, those people become not only investors, they can potentially become customers. And the customers can eventually become investors. You start leveraging one off the other, and the whole becomes greater than the sum of its parts.
Yeah, guys, as you all know, we're just scratching the surface of what this discussion obviously keeps evolving with more information, more data. We're now seeing it. The evidence is there, as you pointed out, Joel. We dreamed about it 11 years ago. That's why nobody understood when we said, imagine having 1,000 shareholders. Nobody could imagine it because but now I have a new one for people. Imagine having 50, 60,000, 100,000. We know a CEO that he doesn't imagine that. He's living that right now. And so it's exciting times. And obviously the secondary marketplace has a vital role in providing that new door, that new chapter in our ecosystem that allows the investors and the companies to give their investors the opportunity to monetize, and just that, to monetize. It's like anything else. It's just something else that you can now offer so you can keep growing your businesses. And to that, thank you both. And thank you, everyone, all our speakers and everybody who attended today. Once again, it's great to have lots of fun. As I mentioned earlier today, we have a few of new core summits coming up here for 2021. We have a number of core summits that are going to be in different verticals that are going to be very interesting for everyone to see. We're going to have one on cannabis. That's right, cannabis and RegA. This is going to be very interesting. The cannabis sector is coming right back up again. Collectibles. That's right, collectibles. People who collect shoes, cars, playing cards, belts, and all that. How are they using RegA, and how is that going to work? And digital securities. We're going to do an entire summit just on digital securities, tokenization, how to do it, digital security fully compliant to be able to issue and to allow your investors to secondary market trade, because that's what digital securities was for, to provide that efficiency. And last but not least, we're going to finish the year off with Dare to Dream. That's right, Dare to Dream is the theme, and I hope you'll join us. Please tell your colleagues. We're very excited about this. Thank you again, everyone. Have a great day. We'll talk to you soon.